All right, guys. Good morning. Good morning. Hope you guys are well today. We got a non-farm payroll data coming out. I finally got a haircut. It was absolutely needed. I needed a haircut, man. It was time. Honestly, my hair was so freaking long that yeah, it's just too long. Got too long. I needed the haircut, so we got it. Payroll data comes out today. Here's Nvidia chart. Nvidia's still at 123. It's looking pretty strong. The SPY is only $5 away from lifetime highs. So that's pretty good. We'll see if that continues. Non-farm payroll data drops early at 8:30 this morning. Yeah, then I think we got some other stuff coming out today too. Let me make sure. NFT data drops. My keyboard is silent right here at 8:30 a.m. Eastern Standard Time and is expected at, let's see what we got. It's expected at 150,000. Last time it showed up at 100. It showed up at 142,000. Unemployment also releases at the same time and is expected at 4.2%. Do we come in better or worse? Subscribe to chat. Something's wrong with my freaking pinky, dude. Ouch. I don't know if I broke it or something. I'm hoping it's not. What's it called whenever you got like muscle spasms and like you have like a type of arthritis in your fingers and hands? What's it called? Somebody answer that for me. I can't remember what it's called. I know it's something. Oh, but yeah, it's my pinky. It's more probable that it's from jiu-jitsu than anything else. But carpal tunnel. Yeah, that's what it's called. Hopefully I don't have carpal tunnel. I think my pinky might be broken or hurt. So, oh, you're speed typing. Yeah, it's probably what it is. Yeah, it's from the new keyboard. That's what it is. Yeah. Hey. It's alright. Alright, we're here. Again, we got non-farm payroll data coming out at 8:30. Ugh. What is SAVE? Isn't SAVE Spirit Airlines? SAVE? Yeah. I mean, I'm sketched out by it personally. Like, I will never ride in a Spirit airplane. I don't feel like riding an airplane stock that is literally, what, $1.30 a share. I'm good on flying on that airplane, you know, like I'm good on flying on that plane. It just makes no sense to. So yeah, again, I avoid budget discount airlines. Just seems not to be the way to go. You know, at the same time though, I've ridden on some bigger planes, and you know, you take small trips on bigger airlines. Usually, you're riding in like not a nice plane. You know, like I know we went to Michigan, and when we went to Michigan, we you know, the original plane ride was nice. It was big. The one that we flew to like Chicago was nice. But then from Chicago out, it was not nice. You know, maybe it wasn't Chicago. We flew to Atlanta. So we flew to Atlanta. That was a big plane, nice plane. The trip from Atlanta to Michigan was smaller, and the plane was just tiny. And I hate flying. I'm scared of heights, and so I do not like flying at all. And the plane that we took to Michigan, because we were going to a small airport, was not nice. It was not good. I didn't like it at all. My wrist is fine. It's my finger. It's my pinky finger. Really, like, again, a lot of y'all might be like, hey, it's John's typing that did it, right? Like, understand, I train jujitsu pretty much regular, like, daily. Every day I train at least once, usually. I train at least 4 times a week. I'll put it that way. Sometimes I'll skip a day, but usually I train at least 4 times a week. And, jujitsu is a very grip-intensive thing where you're grabbing stuff, you can get, it's hard to explain, like, you can get your fingers pulled back really easily in jiu-jitsu, and I'm pretty sure that's what happened. So I don't think this is something that just started. The pain is only in my pinky finger, which I don't think is necessarily a sign of it, you know. Yeah, so a lot of people say BJJ helps with carpal tunnel. Maybe that's true. Anyways, the big news of the day, guys, that I forgot to cover is that the port strikes are done. They're over. They have come up with, like, let me read this. They have come up with news that said the port strikes are done. Dock Workers Union suspends strike. Ports reopen on East and Gulf Coasts. So that is the news today. Again, Dock Workers Union has suspended the strikes. The strikes are now over. I'm surprised the market's not up more, to be honest. Like, there's the SPY at 559. But the port strikes are done. They're over. The SPY just broke lifetime highs again. They're not lifetime highs, I'm sorry. Highs in general. Let's take a look at gold. Is gold down today, I'm assuming, maybe? Yeah, gold is down a little bit. Not too hard to predict there, I think, with all the strikes and stuff going on. Yeah, this ain't my wrist. This is my pinky finger. Yeah, so the port strikes are done, which is good. I'll put a timer up. Man, so I just figured out my son has been lying to us about his schoolwork. It's unfortunate, man. Like, I'm kind of frustrated. You know, so every day when my son gets home, he wants to play video games. And, like, he's in 5th grade. So his excuse seemed plausible. He would always tell me, hey, I did all my homework at school. I don't have any homework. And so we're like, okay, cool. Well, today or yesterday, we check his stuff. And he is, like, not doing good in any of his classes. It's because he hasn't been doing his homework. He hadn't been studying for tests. He hadn't even been telling us when he had tests. And I guess it's our fault, really. We should have been more on it. But, man, that little jerk. We took away his phone. We took away his phone. Yeah, dude. I remember it, too. And I can't get too upset with him because I was a horrible student. In middle school, I was a terrible student. And again, I'm a lot like my son. My son's a lot like me. Like, we both have really bad ADHD, almost uncontrollable ADHD. When I was his age, it was definitely uncontrollable. 5th grade's also a very tough year. You know, I was talking to, who was I talking to about it? I was talking to somebody about 5th grade. Oh, I was talking to the person that cut my hair. The girl that cut my hair. I was talking to her, and she said 5th grade. She said that a lot of people correlate, like, the big emotions from growing up in, like, your teenage years, especially for boys, right? But what she said was that a lot of hormonal stuff is going on when you're 10, 11, 12, right? That you don't realize, and it makes it really tough. It also, there's a lot of social pressure, I think, in 5th grade. Like, I remember fifth grade being especially hard, like, socially. Like, I'm kind of weird. I remember I was kind of like weird. I would get really obsessive about different things and like probably bug everybody about it, you know. And so, looking back, I probably have a little bit of OCD, and I definitely have hyperactivity. I definitely had hyperactivity. And so for my son, it's the same thing. But we're getting there. We'll figure it out. He just needs some tutoring done. My daughter's gonna help us. We're gonna pay her to tutor Jack a little bit in some of this stuff. Have you tried any sort of therapy for ADHD, or you just benefit from hyperfocus of it? I usually I kind of think it's kind of like a superpower, to be honest. If you're interested in something, at least, you can hyperfocus. And so but you have to be interested in it. And that's the problem with like schoolwork, is because, you know, you're not going to be able to be interested in most stuff at school. You know, it's just not the most entertaining thing, especially with all the, you know, smartphones and mobile applications and all that stuff. And we don't let the kids use social media regardless. So social media is not really an influence there. But if you're interested in something, like I remember I got really interested in like the Legend of Zelda video game when I was a kid. And and it really taught me about tech and like web development. I remember I created a Legend of Zelda Ocarina of Time like walkthrough website when I was like 11, you know, and it would like it was like, this was before, you know, the only other ways you could get these type of things were buying like the magazines for video games. And I was like 11 years old, and I was creating these Legend of Zelda walkthrough websites. I can remember doing it. I would also download like Pokemon emulators and ROMs. I would download the emulators, and then the game ROMs, and I would play the Japanese Pokemon games before they came out in the US, even though I think a lot of them were like badly subtitled, but I would still play them before they came out here, because, you know, there was a lag between when they came out in Japan and when they came out in the US, and so I would play those as a kid. And I think all of that kind of taught me tech, and like it got me interested in like web development and tech. And so I think it was like ultimately a plus for me, but trying to focus on something that I'm not necessarily interested in was a very hard thing to do at the time. And over time, you kind of develop more discipline and like willpower from it, you know. But when you're a kid, I just didn't have any discipline or willpower with it. You know, you kind of overcorrect, I think, as you get older, where I used to have absolutely no willpower. And now I've gotten a lot better. I've almost overcorrected, you know. But it's hard to explain. Anyways, Tesla's still at 240s. So Tesla's still at 240s. It was all the way up at 265s. It's still at 243s. I wonder if the port strikes are going to influence Tesla. I feel like they would, right? But why is Spirit Airlines down so much today? I'm trying to look at some news here to see if I can figure it out. Airbus delivered 50 jets in September. Previous was 55 year over year, according to Reuters. If true, it would take year-to-date delivery figure to 500. Previous was 477. We got some ECB members speaking. Yeah, let me do a poll. My hair was so freaking long. Yeah, sorry. I do non-farm payroll data. Do non-farm payrolls come in high or low? What is it? 150,000 expected? Higher, lower. I just vote on that poll. There's the poll. Does it come in higher or low? We also have unemployment again. Unemployment expected at 4.2% today. We'll see if that's good or bad. I hope the SPY trades like yesterday. I made good money. I ended up green yesterday, believe it or not. Well, no, I appreciate it, Sam, but yeah, this is just it's just 5th grade math. I could probably do it if I needed to, but we're going to pay my daughter to do it. She knows the school. She knows the stuff, so she's going to be his tutor. And we're going to pay her for it because it's not really her job, right? But she wants to help, and so we're going to pay her to do it. Started fighting in 5th grade. I remember quarreling. I don't know if I physically fought anybody in 5th grade. I was just a little guy. I remember I didn't hit a growth spurt. I was very short until I was like 7th, 8th grade. They thought I was going to be like 5'5", 5'4", Something happened in 7th grade, 8th grade where I grew, But, all right. Hey, nice TD. My dad told me about taxes and math. Yeah, taxes are pretty easy. If you run a business, you got to save about a quarter of what you make for business, depending on the structure of it and how much you make. If you start to make more, you got to pay a little bit more for sure. Math, there's some math you need, some math you don't. It depends on what kind of math it is. I think teaching people basic percentage math, like basic calculations that you use in everyday life, like compounding formulas, a lot of stuff like that is necessary, like how to calculate decimals, percentages, stuff like that. I think is highly used. Spirit possibly bankruptcy due to failed merger with JetBlue. Yeah, I'm looking at Save right now. Again, I just refuse to fly there. So again, they're dropping over 40% amid bankruptcy discussions. Spirit Airlines decline follows reports of airlines engaging in bankruptcy talks with bondholders. It was trading at $1.35 while it closed at $2.24 on Wednesday. They're contemplating Chapter 11. So remember, Chapter 11 bankruptcy is reorganizational bankruptcy. So there's a bunch of different types of bankruptcy filings. The main one that you think of is like shutting down business. I believe that's Chapter 7. I might be wrong, but I'm pretty sure that's Chapter 7. This is Chapter 11, which would just be like a reorganizational bankruptcy. Hertz famously did the same thing. And if you look at like HTZ, Hertz filed for bankruptcy, like 6 years ago, 5 years ago? And, yeah. They ended up coming back up and getting relisted, I guess, afterwards. But they were down to like $2, $1.50. I ended up making some money on Hertz when it originally filed because it was down so much. And I thought it overreacted. I ended up buying Hertz after it announced bankruptcy filings. But again, Spirit has not actually followed through with the announcement of bankruptcy. They're contemplating it right now. And you can look at Save here. Spirit Airlines down from 230s all the way down to 140s. So, yeah, they're down. What's the best data release for crypto? I don't know, man. I would say like earnings for Coinbase, maybe. I think like inflation data affects everybody. Payroll data affects everybody, including crypto to a certain extent. I would say like CPI moves crypto some. I don't know. I don't really watch Bitcoin always when I look at economic reports, so I don't know. Yeah, but I mean, Keith, so it's also an election year. So Keith says, I don't feel like the economy is doing well. I feel like something will break after the election. Yeah, but it's also an election year. And so, one side's going to say it's the greatest it's ever been, and the other side's going to say it's the worst it could ever be, right? And I think over time, that just kind of chips away at people's like mentality behind things, right? So if somebody is always saying, hey, look how bad the economy is, hey, look how bad the economy is, hey, look how bad the economy is, eventually it's going to chip away at people, And so even though like inflation's relatively low over the last like year or two, payroll numbers are decent, unemployment's under 4.5%. There's some good things about the economy right now. There's also some bad things. The SOM indicator did trigger, meaning based off of the low of unemployment, we have spiked 0.5% or more, which historically triggers a recession. Now, it's not like if you hear that, that doesn't mean we're in a recession right now, right? This is just one specific like recession predicting indicator. So again, it doesn't mean we're necessarily in a recession. A recession, technically, for a recession to happen, we have to have 2 consecutive losing GDP quarters, like back to back, right? That is when we technically are in a recession, is if we have like GDP come in at negative 0.5, GDP coming in at negative 0.75 after that, quarter to quarter, then we could say we're in a recession. But so for now, we actually have very positive GDP. We're at 3% or so for GDP data. So GDP is very strong. It's very positive. It's not weak at all. And so regardless of the SOM indicator, even SOM herself said that she thinks that this specific indication of the SOM trigger is not valid. The reason she said it's not valid is because this, I'll have to look up exactly the why. She basically said that this had to do with constraints and not weakening in the labor market, I believe is what her excuse was. Likely a false positive due to the years following 2020 not following the normal recession and recovery business cycle. She believes that the recent increase in unemployment is due to an expansion of the labor force, which could be skewing the indicator's effectiveness, not necessarily weakness in the labor force. And so, well, they've only made one crazy revision. Like, people keep bringing up the one revision they did. And again, I think just a lot of people are susceptible to election years, right? Like the sensationalist aspects of election years. I think people get really wrapped up in it on both sides. And I get it, right? Like, I understand. But yeah. Again, for a recession, I got to look at GDP, because that's what a recession is signaling, is GDP weakness. And so if we don't have GDP weakness, we're not really in a recession. And you should see at least a little bit of a contraction before, like, if we were trending towards a recession, 1 GDP, you'd see, 1.5%. And then the next quarter, you'd see like 1%. And then the next quarter, you'd see 0.75%. And like, that is a economy signaling like towards a recession. Really, we've seen the opposite, where we've seen 3% and then another 3%. And so, like, right now, we're just not looking like that currently. And it's election year. And so, again, one political side, the side that, whichever side doesn't have power, is going to say, look how bad things are right now. Cough, cough, elect our guy. Cough, cough, cough. Right? And I think that gets a lot of people wrapped up in it. Like, yeah, we're in a recession, but it doesn't mean we're in one. And again, it's an election year. Typically, election years are actually very green. Usually during election years, the stock market closes green, and we also have a pretty strong economy usually during election years, and that's for a lot of different reasons. But yeah. What about Nike? I know Nike's down. They had some type of bad news. Do you think automation? I'm assuming you mean automation. Of factories, power plants, warehouses, jobs will benefit the economy more, the people of the economy. I think people are obviously going to lose jobs, but I don't think that means we shouldn't do it. Like, I think over time we trend towards efficiency, and I think the more efficient thing is to have automation, and I think that's obvious, and that's a very self-evident outcome of it. But I also think people, because of automation, are going to lose jobs. But I also think that jobs are going to be created from automation. And I think the more likely look of it, it's going to be people are going to flock towards factories that are building automation systems and stuff like that. And then you're going to have automation controllers and managers and other jobs that are created from it. And maybe it's not going to be like a completely even trade-off, right? I'm sure there's still going to be some decreases in employment because of automation. But it doesn't mean we shouldn't use it, Over time, like, skilled labor is important, But we also have to look at efficiency, It's going to allow us to produce more. Yeah, I see Rivian down. Why? What happened to Rivian? Let me see. So I see Rivian down pretty big. Production is a problem. Shares of electric vehicle company Rivian were down today. They run into production problems. They reported third quarter production numbers of 13,157, down 19% year over year. Customer deliveries were just over 10K, down 36% year over year. Through the end of September, they delivered almost 37,500 vehicles, up 3% year over year. Production has amounted to almost 37,000 vehicles, which is down about 7% year over year. So they're falling production in production numbers, and that's surprising a lot of people. Their prior guidance for full year production was 57,000 and made about 50,000 vehicles in 2023, so they're being way under that number. New full year production guidance is at about 47 to 49K, lower than 2023, so their trend is losing growth, not growing more. Part shortages are to blame. They said they're experiencing production disruption due to a shortage of shared components on the R1 and RCV platforms. The RCV is Rivian's commercial vehicle made for Amazon. Its supply shortage began in Q3, they say, and it's gotten worse in recent weeks. Rivian, if you look at Rivian stock, if we put it on the right side here, it's down, down a percentage. It's down, what, like 10% here. So buy or sell? I have no idea. Yeah, so I see Palantir today. A lot of people talking about Palantir. Palantir's up to almost 40. Looks good. Looks good. Is there a reason Palantir's ripping up? So Palantir up today. Yeah, so Palantir up almost 1% in pre-market after shares of them rose 4.7% yesterday. So Palantir's been on a little run. Yeah, looks good. All right, guys, we got a minute left, or an hour left until payroll data comes out. 1 hour, guys, 1 hour. All right, guys. Thoughts for sure SPY was going to go down to fill 565. Yeah, I mean, if we have good payroll data today, like anything, I don't know what the market wants. I'm assuming it wants higher payroll counts to show a strengthening economy. But if we do that, it's possible the SPY breaks lifetime highs. You know, it is possible the SPY breaks lifetime highs. I'm not saying it's going to, but it's certainly possible it does. We'll see. It's up there. Yeah, we'll see if we can get some trades in there. Market's up a lot. The port strikes are basically helping the market. Again, the port strikes are done. They suspended the strikes this morning, and that's good, of course. So we'll see if that continues. You know. Yeah, Nvidia up to 124s almost. I just wonder if the SPY is going to make a test towards these levels. Again, SPY's up a lot, Q's up a lot, NASDAQ's up a lot, Rivian down, Spirit Airlines down, Palantir pumping up. Here's Palantir. So Tesla's all the way back down to 240s. Nvidia is still over 123, so it's still looking good there. Market's a little slow. I think it might be patiently waiting for payroll numbers to drop. We'll see. AMD's up to 164. AMD pumped almost up to 170 yesterday too. So could be worse. Looking at our poll numbers here, 57% think higher, 42% think lower. Yeah, we do have some choppiness here in the NASDAQ. You must have told the boss AI doesn't go on strike to help. Yeah, of course. What's the general correlation between your polls and actual happenings? I mean, I don't know if I would say the polls are always right, for sure. I would argue, like, I think it's tough to tell. I think most people have bias with stocks, right? So I think if we're talking about polls, usually if they're about the broad market, most people are bearish, I would say. If they're about individual stocks, most people are bullish, right? Because if they're about individual stocks, people who own those stocks are going to vote green and so forth. So it varies for sure. Yeah, so the strike ending is actually a great thing. Yeah, I mean, my polls aren't there to be accurate, right? Like, we're gauging sentiment. I want to see what people are thinking. But it's obvious. If you ask people if they want to make money, they're going to say yes, you know? So, like, we can't bet on its accuracy, I guess is the point. All right, so we got into a couple little trades here. I'm trading on Top Step X this morning. You can see I'm kind of green on this last little position here. I want to see if it'll break down. Here we go. Got a nice little flush. We're about flat now. One contract left. And again, this is the benefit of Top Step X, is that I can take these little small trades with micro contracts and profit. You know, 74 cents in fees per trade, a tiny amount of fees. And zero commissions. Again, it's the biggest edge in funding, and so if you want to try a funded account program, it's genuinely one of the biggest edges in funding because they allow you to trade micro contracts with no commissions, right? At only a tiny amount of fees. Like, look, you can see it's 74 cents in fees per trade. 74 cents in fees per trade. So I can get into these little bitty trades. Like, look at this: $9, $7, $8.50, $12, $16, $10, $10, $6.50, $6, $10, $9, $20 in net profit in these. And so it really is the best edge in funding. Although they're an affiliate / sponsor of mine, they pay me money. I'm biased, of course. But if you want to check them out and try to get funded in futures, the futures market, you can day trade the S&P, the NASDAQ, gold, some currencies. A lot of Forex traders should be trading futures because there's no PDT rule, and these funded account programs limit your risk when you get started. I'm not saying you're going to make money. In fact, most day traders lose money, but it's a lot cheaper to lose here. If you pass the test, you can get between 50K to 150K in funding, 90% split. They paid out over 40 million. They're one of the most legit in the world. Again, definitely one of the top 3 worst traders of all time in the world right now. Do not copy me. I'm not an investment professional. I'm not liable if you lose. I do trade off stream. You're not going to see all my trades, all that good stuff. And yeah. All right, so we're in this. I'm going to add a little bit to it. We got 2 contracts here. We're going to see if we can break down on this low. There we go. All right, we're going to go and lock that profit in. So we're actually green now on these last little bundles of trades, this short position. We're going to go ahead and cut that. So adding to it right there was the right move, I think. So we added to it right there. That was the right move. Well, and it's not going down, it's slowing down crypto. So crypto said, I don't think inflation is coming down. I remember 2 years ago when the Fed didn't like the numbers. Yeah, I mean, it's not going down, it's slowing down, right? Like, this is the way you have to look at inflation. Here's normal prices, right? Inflation causes normal prices to go up, right? Now, the best we can do is slow it down. And so instead of inflation going like this, which would signal an actual slowdown, right? The best we can do is hope for next year's rise instead of being something like this, right? We can only wait for next year's rise to be something like this. And so prices are still going up, right? But this is a much bigger increase that's going to negatively impact more people than this, right? So if we can slow it down to a rise like that instead, that's better. I hope that makes sense, right? Like, the best we can do is slow it down. Inflation's going to go up. Prices are going to go up. It's why I always tell people, if you're not investing in something, you are losing money over time. Like, you have these people that are so worried about constant market crashes for decades that they never invest. They never put their money anywhere. And this goes for both real estate, economics, and stock market. They're so worried about a crash, they never put their money anywhere, and they just lose so much money to inflation. And so to put this into perspective, if we look at CPI inflation data, right? If we take a look at CPI inflation data over time, even if the stock market crashes, this inflation that we've got is ridiculous. Like, let me see if I can put up a yearly chart. I'd like to see a yearly chart. This is 12 month. Okay, we'll use, see, this is July, August. What was, let me see how much prices went up in last year, or how much have prices gone up in the last 5 years since the pandemic. We use ChatGPT and AI to answer this question. Yeah, so CPI. So prices have gone up in the last few years 20 to 25% or more based off of CPI data. We'll call it 25 just to reinforce the point. Prices in the last 5 years have gone up 25%. Prices are up 25% in the last 5 years. And so the point is, these people that are always waiting for the stock market to crash, they're too afraid to enter investments. They're too afraid to buy up stocks. They're too afraid to buy real estate and all this different stuff. They are so afraid that we're going to crash. They don't realize that even if we do crash, if you would have bought something 5 years ago, you would still be green if we drop. A crash is what? 25% drop. And so even if we do crash, you'd still be about flat, right? And the big problem is that over time, prices are going to go up. Over time, investments like the S&P, the NASDAQ, the Dow, real estate prices, very high probability that they're going to go up over time. Nothing's 100%, nothing's definitive, but by not investing, you're just missing out on a lot of stuff and you're losing money to inflation over time, you know? So basically, you got 300K. If you're sitting on 300,000 in cash and you lose 25%, then you basically lost 75 grand over the past 5 years if you didn't invest that money. If you're sitting on cash, you've lost $75,000 to inflation, meaning in buying power terms, right? So 300K is worth about $75,000 less in buying power today than it was 5 years ago. And so, yeah, I'm not going to tell anybody what to do. I'm not an investment professional, but still. It means payroll data. So payroll data, payroll data is basically what it sounds like. It's payroll numbers. It's jobs, right? So it shows how many jobs were added or lost in the economy. So when you hear payrolls, think jobs, excluding jobs in the farming sector, government, private households, nonprofits, and stuff like that. But non-farm payrolls are a majority of jobs in the country. So a higher than expected NFP report signals more jobs, basically economic growth. Like if the stronger the economy is, the more people businesses can hire is the easiest way to put it, right? The stronger the economy, the more people can get hired. The easier it is, people get hired, more jobs open up, and it signals economic growth. And so with payroll data, the reason it's so incredibly important is because this signals job openings in the country. We also have the unemployment rate that dropped simultaneously today at 8:30 in about 40 minutes. And so we have unemployment today. Last time it showed up at 4.2%. This time they're expecting it to be the same at 4.2%. But it could certainly be something different than 4.2. What if it's sitting in a 4% APY account? Well, then you're probably fine, Jamie. Realistically, I'm not going to say yes or no. I really don't know. It's all relative. But if you got 4%, you're doing okay. If you're making 4% on your money, you're probably doing okay. Because if you do the math calculations, right, 4, 8, 12, 16, 20, right? So that would mean the average inflation rate over the past 5 years is slightly over 4%. So it would be about 5%, right, if you do the math. 5, 10, 15, 20, 25 would make it about 25% inflation, which is what how much prices have gone up. And again, the thing to understand is that prices do not go back down, right? So once prices go up, they don't go back down. If this is price graphs, they don't go like this. Again, the best we can do is slow the growth down. And so once prices go up, say we got a graph like this, right? They're never going to do this. Not unless we enter like a deep recession. So they're not coming back down. So those prices are you're stuck with them. The best we can do is slow it down. So instead of rising like this, hopefully we can rise it like this instead. Right? So the best we can do is slow inflation. We can't make it go down. The only time it's gone down in 20 years was when we were in deep recessions, i.e. 2008 was the only real time prices have actually gone down. And that was mostly because of, the economic recession that we were in at that period of time. Yeah, we're at these high levels, but we do have payroll numbers today, so we'll see if we get anything good, worthwhile. If unemployment goes down, we go rich? Not necessarily. I think the market mostly is weighted on payroll data, number one, versus unemployment. Personally, that's what I think. I might be wrong. Yeah, I don't even know where I would find a graph like that hitting the wires regarding... Right, so we got into a couple more trades. We are shorting right now. We got 2 contracts here. And again, this is why Top Step X is just powerful, because I can get into these little trades and still profit net, build up a cushion on the day, and then use that cushion to swing a little bit larger if I want to. No, I don't think that's what it is at all. I think the market's green this morning, mostly specifically because of the port strikes ending. They suspended the port strikes. They got the deal done. There we go. So we just took some more profit, made another $20 there. We'll take it. We got a nice cushion on the day now, heading into this report. Nice little cushion. We'll see if we can keep it up. But yeah, I think the market's mostly up in pre-market because the port strikes were over, right? The port strikes have such a big effect. They've caused downward pressure in the markets over the last few days. So the port strikes ending. And this is a new shirt, by the way. I know I wore a white shirt yesterday. The white shirt I had on yesterday actually had a stain on it. I remember it had a stain. I spilled coffee on the shirt yesterday. This is a brand new shirt. Yes, I do shower. Okay, I do change clothes. I'm just wearing another. I got a bunch of white t-shirts that I wear. I have to shower every day because I go train jiu-jitsu, and anybody that has ever trained knows you better shower afterwards. If not, it's gross, right? So really, I probably shower 3 times a day since starting jiu-jitsu. Again, I got a little bit of OCD, like I said before, but Non-farm payrolls is sell or buy. I really have no idea. Nobody does. Nobody knows if we're going to have good numbers, bad numbers. With docs open again, I'm keeping an eye on Walmart. So will you ever be on Top Step TV? Yeah. I'm going to be on there sometime soon, I think. But I've been on there multiple times before as well. So I've been on Top Step TV a bunch. Great show. Yeah, I'm pretty sure I hurt my pinky from BJJ. I don't know, like this pinky hurts. You know, it seems alright though. Yeah, it's not that I try to shower 3 times a day. It's that I usually I kind of rinse off prior to jujitsu just because I think that's kind of gross. And I also make sure my gi's washed or my rash guard and stuff is washed. And then after that, once I'm done with jujitsu, I shower again. And then my wife's allergic to dogs, right? So anytime I play with the dogs, I shower so that she doesn't get allergies. And so that usually makes it so that I shower 2 or 3 times a day, you know. Hey, at least I'm clean over here. Do y'all expect a spike? A spike in what, Austin? It depends. Depends on what you're talking about. Again, the payroll report's pretty big today, guys. Pretty big report. Boeing? Yeah, Boeing said they had updated delivery numbers. I'm surprised they're not up more. So I did see some news with Boeing today where they put out something that said, let me see, where'd it go? Airbus. Oh, no, this is Airbus. Airbus reportedly delivered 50 jets in September. Previous was 55 year over year, according to Reuters. If it's true, it would take the year-to-date delivery figures to 500. Previously was 477, and target 770 for this year for Airbus. So I don't know if that's good for Boeing. That's probably bad for Boeing. They're competition for Boeing. So we'll see. Yeah, I mean, payroll numbers are expected at 150,000 today, though. I'm showing 150K for expectations. At least on Market Watch is what I usually look at. We can look at some other sources, though. So yeah, we got payroll numbers today, and that's basically unemployment numbers, of course. I'll put this up on screen. Red today, yeah. And here's the NASDAQ. NASDAQ's over 20K. I've been attacking choppiness. That's kind of how I've ended green today so far, is because I've been trading choppiness. Economists expect NFP data to show that the U.S. economy added 140,000 jobs in September. I mean, I'm showing 147 or 150. I'm not showing 140. Last time they showed 142. And so I'm not showing 140. But every analyst is different. They have different estimates. If no in red, then gold up or down? Question mark. Honestly, I don't know what. You got to be more specific. If no in red, then gold go up or down. Yeah, again, genuinely no idea what you're asking me. Allison, I'm thinking 145,000 in the market likes it. Unemployment is expected. I don't know. I think 145 is under expected. So that'll be low. If it shows up at 145K, that's going to be lower than expected. Expectations on my end, I'm showing 148, 147, 150K is what different analysts are expecting. So if we show up at 145, that's going to be lower. Now, remember, sometimes the first move is the wrong move. And I think a lot of the time when people watch economic reports, say the economic report comes out here. A lot of people think if it shows economic strength or if it's what would be called a good report, that the stock or whatever you're watching, the NASDAQ or SPY, should automatically just go straight up. right? But understand, sometimes the first move is the wrong move. And so sometimes, like, you'll see something more so like this, where payroll numbers come out here, we get a big drop, everybody gets stopped out, and then we rebound and trend up for the rest of the day like that. That's what we see a lot too. And so it really depends. You don't really know. I'm not saying this is going to happen. I have no freaking idea what's going to happen. But this is something that we do see pretty regularly here in terms of like reactions to economic data. It's not always the first reaction. In fact, there's a very famous saying, which is that sometimes the first move is the wrong move. And that's true. It could certainly be wrong. Just because payroll numbers are good or bad does not mean we're immediately going to go in that direction. We might get an initial push one way or another, but just be smart. Is a good jobs reading good for US dollar? Yes. Generally, higher payrolls is good for the dollar index. Yes. If non-farm payroll data is better than expected, that means economic growth. But on the other hand, that means the Fed has probably cut rates less. True. Right? The Fed's more likely to be more aggressive in rate cuts if they show economic weakness. If the economy is strong, there's less of a need to cut rates, even though I think they've already made that decision based off of inflation. You skipped my question? Yeah, I skipped a lot of questions, brother. I don't know, you know. If non-farm payroll is bullish and the unemployment is bearish, which direction are we to go, buy or sell? Again, there's no way for me to tell that. In theory, that would be a neutral report, although I do think NFP data has more weight than unemployment. I think non-farm payroll data is more important. But again, I'm speculating, I'm guessing. I have genuinely no idea what's going to happen. Nobody does. We can only guess or speculate. Not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly. Remember, guys, I could be one of the top 3 worst or best traders in the world right now. Do not copy me. I do trade off stream. I'm not even claiming to be a good trader, chat. Understand these rules. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Don't copy me, basically. Is the robo-taxi priced in for Tesla? I really don't know. Tesla's gone up a lot, and it's holding fairly well. You know, like Tesla's... This is Tesla since basically the beginning of the year. The year started out here. Tesla's had a really good year. It opened up the year really weak, though, and so it's kind of easy to have a good year when you've dropped so much leading into the year. But I think... I don't know. What I think is that we're going to have a buy the rumor, sell the news event for robo-taxi. I'm not 100% sure. Just based off of how Tesla has historically behaved, a lot of the time, like, we pump up a lot leading into these big events, like the Cybertruck event, or there was like a 420 event that Elon did about something. I can't remember what it was, maybe like Doge or something. And a lot of people waited and bought up the stock leading up to those events. And then once the actual event happens, either it's underwhelming or people just start taking profit out of fear or urgency or whatever it is, and they just start unloading, and Tesla stock ends up coming back down and correcting a little bit. And so that's something I see a lot. That's a nuance of Tesla. I see a lot where it's a buy the rumor, sell the news, where you go up a lot leading into the big event, and then once the event starts, stock goes down. Again, I'm not saying that's going to happen. That's just how it's historically behaved. And I think it also depends, obviously, on how well they execute the robo-taxi event. To be honest, for me, it seems almost too good to be true that you can have this vehicle that just kind of goes around and drives other people around, and you don't have to do anything, and you can make money from it. I think if it works, it's eventually going to get really saturated really, really quickly. Everybody's going to try to get involved with it. If it doesn't work, obviously Tesla stock is going to go down. But to me, it seems almost too good to be true, and I hope I'm wrong. I love Tesla. Teslas are really cool, in my opinion. I want it to go up, but I also am a slight degree of skepticism moving into this event just because it seems almost too good to be true. But again, I might be wrong. I hope I'm wrong. Hey, what's up, Dean? We'll see how good AI is. I typed AI specifically. Did someone just quit from Tesla? Very vague. Let's see if it gets it. Come on, Chat GPT 4.0. Yes. Tesla's chief information officer recently stepped down from his role in early October. He has been with Tesla since 2012 and was promoted to CIO in 2018. His departure comes just before Tesla's much-anticipated robo-taxi reveal, raising questions about the timing and reasons behind the move. He was instrumental in developing their data infrastructure, which supports the company's AI and self-driving efforts. So, yeah, basically, did he give a reason? This is why AI is useful. He did not publicly provide a specific reason for his departure. Reports have not clarified whether he left voluntarily or was asked to leave, which was left somewhat ambiguous surrounding the circumstances of his exit. Yeah, so no info on why he left. I gotta pull up Discord. All right, I'm also going to put this thing in sub-only mode, chat. If you have not already, hit the subscribe button. I'm trying to pump towards 150,000 subscribers. So listen, guys, I would never pressure you to subscribe. If you don't, I'll hate you forever. Do it now. All right, subscribe. I'm trying to get 150K, chat. Yeah, so the dock workers union is going to suspend the strike until January 15th to allow time for negotiations. That's causing benefits. Exxon sees a $1.6 billion earnings hit from oil refining margins. Red Lobster's new CEO said the seafood chain's endless shrimp offering caused an all-you-can-eat chaos event. He said, quote, "The shrimp is very expensive product to give away endlessly. When you have endless shrimp and people are coming in and sitting down at the table and eating for hours as much shrimp as they possibly can, you stress out the kitchen. You stress out the servers. You stress out the host. People can't get a table. It creates a lot of chaos." Well, who came up with this idea, right? What could go wrong giving away endlessly free shrimp? Of course, there's problems. I love shrimp. I love Red Lobster, to be honest. I'm sad to see him go. Again, Rivian stock is down. It had pretty bad production numbers. Basically blamed them on supply chain constraints, orders not being done. Like they couldn't fulfill a lot of orders for their parts to build the R1. And so they had lower shipping or lower production numbers because of it. Rivian's down about 10% today. Yeah, sorry. I'm just now looking at Discord pawn. My bad, dude. Louisiana guy loving shrimp. Shocked? Yeah, dude. Listen. I love crawfish, too. A lot of people don't understand crawfish. You know? Crawfish is delicious, you know? Alright, guys. A lot of people boil crawfish the wrong way. Like, I live in Texas, and they just make it wrong. They just don't do it right. They add the seasoning after you boil it. It's just not the same, you know? You could buy a hoodie. We got merch already. Buy a hoodie, dude. Buy one. I don't have really any ads up for it, but you could buy one. There's got to be somewhere in the description, right, that you can catch it. Oh, yeah, I don't know. I don't have it up. It's all right. Tony Sastries, yeah. Yeah, I don't know. I'll figure out how to put the merch back up. I don't know. I have to mess with the YouTube thing. I don't ever sell merch, though. I don't try to sell it. trying to remember what the place that used versions of. I could build it in my store. I just haven't yet. Let's see, merch. Shopping. Yeah, so I got a store apparently, but I don't know what happened to all my merch. Oh, here's some of it. Honestly, these are old. I kind of like some of these hoodies though. Some of these hoodies are cool. Look. They involve. They're mostly trolley hoodies. Don't sue me, bro. This one's kind of cool. I do like this one. Don't sue me hoodie. Don't sue me, bro. Most handsome trader, you know. So we got some stuff. I mean, if you want to buy some stuff, what else we got? These candlestick pants are kind of cool. I like them. We got a mug. That one's kind of cool. I do have this hoodie, so I have this white one right here. Yeah. So here you go. Just working out, listening to your stream, great value, keeping me up with the market and learning new things along the way. Props to you, man. Hey, thanks so much, Flying. I appreciate it. Thanks. All right, guys. What would be the best scenario for the market to go up further? Lower non-farm payrolls to lead to Powell to cut further. Well, Powell's gonna cut further. It would. Okay, so let me look at the odds anyway. So you got to think about it like this, right? Powell's gonna cut. The question is, how much does he cut? You know, historically, or in recent history, he said that we were gonna cut most likely. At least the last Fed meeting 2 weeks ago, he said that we were gonna do 50 on that Wednesday. So a few weeks ago, we did 50, and then basically 25, and then 25. You know, this is basis points, right? So these are decimals of a percentage. Like these are quarters, half a percentage, so forth and so on. And so 50 plus 25 plus 25 is 100 basis points, which is 1%, right? So basically, Powell's plan, at least a couple weeks ago during the Fed meeting, was that they're going to cut the federal funds rate about 1% this year. Now, this is always subject to change, and it's subject to change depending on the economic reports. Like payroll numbers today are going to influence this for sure. And so when we look at like the odds, the probabilities of a rate cut now, if we look at this here, you know, right now they are expecting 71% chance of a 25 basis point cut. So we're basically still trending towards that path, especially if we have like strong payroll numbers today. That'll mean we're less likely to cut rates more aggressively. We're going to cut rates, but we're less likely to cut 50 basis points, which is right here. And again, these are short-term interest rates. Eventually, they will trickle into long-term rates like mortgages and auto loans and stuff like that. My guess is by next summer, we might have a stronger real estate market, residentially at least, because, you know, there's a 3 to 6 to 9 month lag from when the federal funds rate, short-term rates are cut, to when they trickle into the longer-term rates, right? And so by next summer, spring, really, we could have lower interest rates that could spark a hotter real estate market, but we don't know. We're all just guessing here. So, hope that makes sense. So, essentially, stronger payroll numbers will mean it's more likely that we only do 25 basis points cut. If we have weaker payroll numbers, this percentage might go up, which is a 50 basis point cut. So, basically, if we have weaker economy numbers, it's more likely the Fed's going to be more aggressive in their rate cuts, and they might cut 50 basis points. So they might cut 0.5% in November, and then whatever they do in December. So again, if that happens, maybe we cut interest rates 1.5% this year. And obviously that means cheaper mortgages, like everybody has cheaper access. The reason the Fed does this is to stimulate the economy. And so if we have a weak economy, or weak economy numbers, I should say, the Fed will bring interest rates down. And by bringing interest rates down, what happens? Everybody has a lot cheaper access to money. And so they spend more, they buy more, businesses grow. Like all this stuff happens because everybody has cheaper access to money. If the Federal Reserve is bringing interest rates high, like raising rates a lot, keeping rates high, like in 2021, 22, they raised the federal funds rate pretty high, and then they paused it for a year, and then the last Fed meeting was the first time in a year that they had moved the rates at all. It was the first time in like 4 years that they had moved rates down, that they had actually cut rates, and it was the first time in a year in which they didn't pause, right? They finally did something besides pause. They raised the federal funds rate up, and then they paused it, and then they finally cut it back down last a couple Wednesdays ago. Was it last Wednesday? I have to look at my time, but yeah. And if we look at the Fed funds graph as an example of this, right? Like we can look at the federal funds graph. Here's the federal funds rate. Let's look at a yearly chart. Let's look at here's a yearly chart. So again, we had been pausing rates. We had raised them up really aggressively following 2020. Like 2020 happened. The Fed desperately tried to save the economy, so they did QE, which is they printed money, they created bank reserves, they bought up bonds and other financial assets with it, which injected liquidity in those markets, allowed interest rates to go down a little bit. They also straight up cut the interest rates, and they also sent out stimulus checks. They did all this stuff to stimulate the economy, and the economy did better following that. But the consequence of a thriving economy, especially one in which you had to do money printing, stimulus checks, all that stuff, the consequence was inflation. Inflation spiked to 10%, and so the Fed pivoted to the other aspect of it, a more hawkish Fed, or a restrictive Fed, where they're trying to bring interest rates up to push the economy down a little bit to stop inflation. And so that's what they did. They raised the federal funds rate, and then they paused it for a year here. And then finally, last Wednesday, I think, they finally cut rates back down, and they started dropping it. And so I hope all that makes sense. That's the economic policy that we've seen over the past 5 years, really. The GDP report is out, but are your trash cans hoodie? I love it. All right, guys. Again, market's kind of flopping sideways up and down. Carol calling ... hoodie. Yeah. Hey, coming soon. Yeah, of course we're going to share the non-farm payroll data right here. We cover it faster than everybody else too. Or at least we try to. That's why we get thousands here. All right, guys. Again, expectations 147 for payroll. So that's kind of the neutral level, 147. Under that's going to be lower than expected. Higher than that's going to be higher than expected. Unemployment expected at 4.2%. This is another, unemployment's definitely relevant today. I think payrolls are more relevant. Unemployment's still important to watch today. It's definitely important to watch, pay attention to, get it in. And so obviously higher unemployment's worse, lower unemployment's better. And if unemployment spikes, the Fed's much more likely to do aggressive rate cuts, like 50, 75 basis points. It depends on how much it spikes, of course, but higher unemployment will signal more of a need to cut rates aggressively. And so that's an aspect of it you want to understand as well. It's a buy. What is? Nobody knows, right? And again, the more people tell people what to do prior to these reports, the more I think they're brand new, right? Because number one, experienced traders recognize the variance that we get from these reports. Anybody that actually watches these reports regularly and understands them is going to understand the variance that we get. Nobody freaking knows not only what the payroll numbers are going to be, but how the market's going to respond to it. We could have great payroll numbers, the market can drop 5%. We could have terrible payroll numbers, the market could rip up 3%. Nobody freaking knows. And so acting like anybody knows and that there's some type of signal ahead of payroll numbers usually shows inexperience and like rookie trader mindset. And that includes telling people to buy up or short anything ahead of this report. It's usually like a rookie mindset, to be honest. Experienced people understand the variance that we get from this and probably trade less, not more, leading up to that report. It's smarter to wait and react to the report versus trying to predict what's going to happen, because there's no freaking way to predict what's going to happen. And so everybody telling people to buy gold and buy all this different stuff. And, again, Understand, nobody knows. All right, so Mark Zuckerberg now the world number 2 on the richest person list. He overpassed Bezos, Jeff Bezos. So Mark's wealth stands at around 206 bill, according to Bloomberg. Puts him just ahead of Amazon after Amazon dropped 1.52%. Jeff Bezos now about 50 billion behind Tesla CEO Elon. Yeah. John from Beginner Trading is going to be up there one day, I'm telling you. You know. Yeah, you know, my wife actually said that paper towels and toilet paper were not at the store. You think you could take him in grappling? I don't know. I don't know if I just watched an old video of him grappling in BJJ. I'm a white belt. I'm spazzy white belt in jiu-jitsu. I'm not even claiming to be good, you know. I mean, I think I'm good, but like that's just based off of how I do versus other people when I roll. But I also, with that said, if I roll against like a blue belt or a purple belt or a brown belt, I'm getting beat up most of the time, you know. Like yesterday I rolled against a brown belt and a black belt. I got destroyed, you know. But the point I was trying to make yesterday is when I look at Mark, I watched this video of Mark, and his hair was short, and so I don't know if it was an old video. I know he's kind of grown out the curls a little bit recently. So maybe it was an old video. It was him rolling with Lex Friedman. Lex looked really good, right? Lex knows his stuff in jiu-jitsu. He obviously trains. Mark, you know, he had good butterfly hooks, and you know, he tried to butterfly sweep, and you know, his north-south choke looked okay, but some of the stuff he was doing, I don't know. And again, I'm not claiming to be better or worse than him. I don't know. I think it most likely, the most plausible thing is that his hair was shorter. It was an old video, and he's since gotten better, you know. Because if you were to film me when I first started, I'd probably look pretty bad too. All right, guys, 7 minutes left. 7 minutes. We got about 1,500 people here. Yeah, where's oil today? Is oil up? Thing is, when you have money, you can hire the top 3 coaches and be the top 3. Yeah, for sure. But the other thing, like, if you ever see Ashton Kutcher roll, right? Like, people give Ashton Kutcher a lot of hate, and understandably so, because when you look at him roll, he doesn't look like a purple belt. Like, he looks worse than a lot of people. And so Ashton Kutcher's rolling footage that I've seen, I don't know if he was hurt. I think maybe they said he was hurt, but he did not. His armbar looked very weak. And so I always heard Ashton Kutcher trained. But one of the things when you get to these like really rich people, like these really wealthy people, is like the coaches want them to keep paying them, right? And they also, like, jiu-jitsu is a humbling thing. And I think when you have that much money, sometimes humility is hard to come by. And so I'm definitely one of the top 3 most humble people in the world, so I would understand, you know. But no, I think sometimes these coaches just kind of gift them these belts because they want them to keep paying them, you know. And I think that's something that you see a lot with really wealthy people, and I think that's a detriment to their skill and growth. But I think Mark Zuckerberg probably knows this stuff. I saw some footage of him in a competition where he looked much better, much better. So. Hey, thank you, Weez. I appreciate it, man. Thanks so much. Yeah, sorry. I can't tell if you're trying to promote yourself, Mike, or whatever it is. Sorry, brother. All right, guys. 5 minutes. 5 minutes. We got about 1,600 people here. Cisco is reportedly close to investing in Nvidia-backed AI startup called CoreWeave. The deal will value New Jersey-based cloud computing provider at about $23 billion, according to Bloomberg. So, a lot of AI stocks sprouting up recently. All right, guys, we're very flat leading into this payroll report. We got 5 minutes left. 5 minutes left. We got about 1,600 people here live. you buy a Ferrari. When you want to be somebody, buy a Lambo. When you are somebody, I don't know, man. Ferraris are harder to buy, actually. Lambos are cooler. I agree. I like Lambos much more than Ferraris, to be honest. But Ferraris are the more exclusive vehicles for sure than Lambos. Anybody can buy a Lambo right now. You go to a Lambo dealer, you can buy one. Buying a Ferrari is like, it's almost like buying a Rolex, right? You ever try, if you go to a Rolex dealer, try to buy a Rolex, you ain't getting one, you know? Like, they're going to put you on a wait list. They might call you in 4 months with some watch nobody wants. You're definitely not going to get the watch you want unless you're like somebody big that you know. Same thing with Ferrari. You know, they're not going to sell it to anybody. It's more exclusive, unfortunately. And I disagree with that. I'd rather, if I'm spending $300K, you better take my money. Anyways, we got 3.5 minutes. Age-old trading question. Win Lambo, the greatest question of all time. Top 3 for sure. Right, I think smart people don't buy that stuff. Again, you got to think about it like this, right? If it depends on how much money you have. But say you have $1 million. Are you really going to spend 20% of that $1 million on a car, a wildly depreciating asset? That's not what smart people do. Now, you got 20 million, that's a different story. Do whatever you want, right? That's FU money. But if you have less, if you have $1 million, you shouldn't be buying a supercar. Not unless you can benefit your business or profit from it in some way or another, which could happen, you know. Anyways, payroll numbers, guys. Higher payroll numbers. Again, payroll numbers. Higher payroll numbers will signal less of a need to cut rates. Lower payroll numbers will signal more of a need to cut rates aggressively. And so the big question is, what do we do in November? Right now, the chances are for 25 basis point rate cut being the most probable outcome in November, but that is subject to change. If payroll numbers show up weak, we could cut rates much more than 25 basis points, 50 basis points or more, depending on that stuff. Unemployment expected at 4.2%. Chat, 4.2% unemployment. That's a very relevant report coming out as well. It's something you want to watch, something you want to pay attention to. So get ready, guys. We got 2 minutes left. We got 2,000 people here live. So, hey, I appreciate the love. Y'all hit that subscribe button if you haven't already. I appreciate it. Thanks so much. And let's keep growing. I'm moving towards 148,000, 150K. We're getting there, guys. We're getting there. 2 minutes. All right, guys, we got 1.5 minutes. You guys ready? We got 2,100 live. Right, if you want to get a truck over 600K, you can write it off. But, yeah, I don't do that. I don't have a use for it. It's really hard for me to justify a business vehicle whenever my business is online. You know? I've thought about it, like buying something and slapping a big sticker on it or something, but I don't know. Higher unemployment good for US dollar? No. Wrong. Oh, maybe pairs and Forex, maybe. I don't know. All right, chat. We got 1 minute left. 1 minute left. All right. Again, 150K expected. 147 to 150,000 is what I'm showing for expectations for payroll numbers. Again, unemployment expected at 4.2%. That's what it was last time. Payroll numbers last time showed up at 142. This time they're expecting, again, anywhere between 147 and 150. Somebody hold me. All right, guys, 30 seconds. 30 seconds. Again, give me your last bit of predictions out in chat right now. Hit the live button next to the play button. Make sure you're fully caught up on the stream. I appreciate the love. Do it now. Subscribe now. Try it one time. It might feel good. All right, here we go. All right, we got Tesla. We got Nvidia. We got the NASDAQ. I'm going to put gold up on the right side here. All right, this timer's a little bit early, chat. We got 10 seconds left. We're really about 7, 6, 5, 4, 3, 2. All right, here we go. And here's the report. Unemployment 4.1%. Payrolls 254. Everything showed economic strength. 254,000 payroll numbers, way higher than expected. Unemployment rate at 4.1%, lower than expected. The NASDAQ, gold is going down. The NASDAQ is shooting up. Again, Nvidia is popping up. Again, unemployment lower than expected, better than expected. Payroll numbers better than expected. 254,000. versus 147,000 expected. That's a crazy number. A crazy, crazy number. We expected 147K. I thought for a second I thought it was 100 and for a second I thought it was 154K. This is 254,000 versus 147,000 expected. This is way higher than expected payroll numbers. A shocking amount higher payroll numbers than expected. And again, what this signals, guys, is less of a need to cut rates 50 basis points. This means that we'll almost certainly cut rates 25 basis points next month or in November. Yeah, this signals almost certain to cut rates 25 basis points in November if we're going to cut rates at all. But again, non-farm payrolls 254 versus 140 expected. Unemployment 4.1%. Chat. This is a crazy number, to be honest. Wow. And again, you got some people, since it's an election year, you got some people, anytime we have higher data, better than expected economy data, they say it's not real. Again, election stuff's so strong right now. Everybody is so biased from the election. If they want their person to get elected, they're going to say how weak everything is now. And like, I get it, but I think these payroll numbers showed a shocking amount larger than expected. I'm not even saying, I don't know, maybe they'll be revised later. You know, last time, obviously, we had that big $850,000 or 850,000 payroll revision, that we had the update for about a month ago. And so we'll see, guys, but a shocking amount higher than expected. The market hasn't really gone up that much. Gold is actually spiking down here. So as I said, even if we know what the payroll numbers are going to show up as, nobody knows how the market's going to react to it. What this means definitely is that it's less likely that we're in a recession. A pause is going to show up as an option. Yeah, I think it'll show up. I don't think it's going to be probable. But let's take a look, right? So let's take a look at the CME watch tool and see what the odds are for rate hikes now. Or not rate hikes, I'm sorry, for rate cuts now. Let's see what the odds are. Again, market's churning up here. If we look at this, yeah, I mean, still pretty probable. Again, if you haven't already, check out Top Step X. If you want to get funded in futures. In the futures market, there's no PDT rule. You can day trade, short, buy market, sell market. Very similar to day trading stocks. You can day trade the S&P, the NASDAQ, gold, some currencies. A lot of Forex traders should be trading futures. There's no PDT rule, less red tape, and these funded account programs are allowed. Top Step is the biggest edge in funding. They give you a demo, test your skill. If you pass the test, they fund you. If you fail the test, you only lose the monthly subscription. It's $49, but it's the biggest edge in funding because there's zero commissions on Top Step X. And so specifically on Top Step X, there's zero commissions, only 74 cents in fees per micro contract. It's a tiny amount of fees. And so what it allows me to do is I can get funded, like this is a funded account. I can get funded and make $12, $4, $7, $10, $6 with no commission. That's a huge edge. You can limit your risk. If you trade regular E-mini contracts, you can lose thousands so fast. It's hard to manage risk. On Top Step X, there's literally no commissions. It's one of the biggest edges in funding. If you use my link, you get a big discount. I'll put the link up. Great way to help support your boy here in this channel. They are an affiliate or sponsor of mine. They pay me money. I am biased from it for sure because they pay me money. But great way to help support the channel. Honestly, a great way to learn how to day trade. Most day traders lose. Once you're funded on Top Step, there's a 90% split. Great way to help support the channel. It's the best of both worlds. 90% split once you're funded, similar to funding the account yourself. If you lose, you only lose the monthly subscription. So check it out. There's the link. All right, guys. Market's still pushing up. Market's still going over 20,000 recently on the NASDAQ. The NASDAQ is over 20.1 thousand. And so it's moving up really nicely here on this payroll report. But do you guys think the market corrects here? I'm going to end this poll, and we're going to do another poll right now. And we're going to ask people, does the market turn down? Do we get bearish action? I'm going to say, do we get bullish or bearish action? Action for the rest of the day after today's big payroll beat. So bull or bear, guys, vote on the poll. We're kind of stalling up there. Nvidia's testing highs. Nvidia almost up to 124s. Look at Nvidia. So Nvidia's going up. That's usually going to drag the market up. Vote on the poll. We got 49 votes immediately here. 62% are bullish, 35% are bearish. We got 120 votes. 34% are bearish, 65 are bullish. So most people still bullish here. And honestly, it looks bullish right now. We're starting to push up heavy. Yeah, it's definitely an election year, of course, you know. But again, I think, like, I think people who are predicting a recession during an election year don't understand economics, right? They don't understand probabilities. They just get really biased from elections, right? One side's going to tell you it's the greatest it's ever been. The other side's going to say it's the worst it could ever be, and both of them are wrong, really. And so I think you got to take everything with a grain of salt and understand that nuance. During election years, we're almost never red during election years in the stock market. We almost never hit a recession during election years, economics-wise. And so those two things are very true. Now, 2025 is a different story. I don't know what's going to happen in 2025, but I think people have to understand those probabilities because those are very consistent, very consistent. You could time test those and look back at history. Very consistent. Nvidia, guys, at 124.30s. NASDAQ at 20.1K. NASDAQ at 20.1 thousand. So it's pumping up. Gold at 2660s here, chat. 2660s. All right, guys. All right. I love you. Have a good day. All right, bro. Hey, Jack. Hey, Jack. Here, put this on the car, dude. You gotta go. Hey, Jack. Your mom's late. She has a meeting with. Come on. I love you, buddy. Here, come here. Give me a hug, man. Hey, put your shoes on in the car, bud. All right. I love you too, buddy. Have a good day, dude. All right. Everything will be all right. Okay. Love you, dude. It will. All right. You're young. You're still young, buddy. Love you, man. Love you. All right. All right, guys. So yeah, market's breaking highs. Nvidia pushing up. Sorry, my kids are going to school. Nvidia up there to 125s. Nasdaq up to 20.2 thousand. Gold at 2660s. So gold ended up turning down, and now it's starting to rebound back up. But we are up a lot. Again, these payroll numbers were absolutely crazy. Absolutely crazy. Again, to expect 140,000 and to show up at 254,000. That's a crazy number. And again, we did so expect it at 140. I was showing expected was at 147 to 150, but whoever, the source I got these from did say expected 140. So maybe I was wrong there. 2-month net revisions is up 72,000 as well. So you think we're celebrating too soon? I mean, I don't think this move is big enough to be like, oh, it's too big of a celebration. I think, again, what I'm curious about is the, is the payroll data here, or is the probabilities of rate decisions going into November here is what I'm curious about. So this has changed a little bit. It's at 66% thinking that we're going to do 25 basis points. I'm surprised this number didn't go down more, right? Because this is 25, this is 50 basis point cut. This is 25. Right. And so in theory, because of these really strong economic reports, like payroll numbers being really high, this percentage should go up. So it should be less likely that we're going to do a 50 basis point cut and more likely that we're going to do a 25 basis point cut or something else. Right. Tesla also pump it up to 246s. But we'll see, chat. We'll see, guys. Again, it doesn't mean too much. It's still early. We still got a lot of economic reports until November. Early November is when this meeting's going to be, the next Fed meeting. So early November is when it's going to happen. And again, if you haven't already checked out Top Step, if you want to day trade, we're going to day trade on there right now. We've already got some good trades in. I might actually short this top a little bit. We've gone up so much here. I'm going to try to short, take one contract. I'm going to use one contract here. And again, the big part about Top Step X is that I can use one contract and actually net profit if I make money. On the trade, I can usually net something at least. It's still a risky endeavor here, and we're pumping up a lot, but I'm going to add to this 2 contracts. Again, we already got about a $30 cushion here, so if we lose, we can get out about flat on the day if it starts to continue pumping up. But again, the biggest edge of Top Step X, again, no commissions, so I can day trade short, all that good stuff. No commissions. I'll put the link up one more time if you want to check it out. Again, great way to help support the channel. I appreciate the love. right, so we're starting to turn a little bit. We're going to see if we get a larger turnaround here. That's not good. We broke highs again. I'm definitely shorting a risky thing here, shorting this move, but I do want to see if we get a reversal up here. I'll take 3 contracts. There we go. That's better. Back to flat. See if we keep turning. See if we get a red candle here. Flat. Well, there we go. There we go. Alright, so we just made about 40 bucks just now, shorting that top, getting it in. And again, this is the best part about Top Step is like, look, I can take these small trades. Look at this. These are most of my trades today. Look at that. Look at that list of trades. Number one, my accuracy has been great so far. Like, look at that. But number two is that I can do this with Top Step X, specifically on Top Step X, because there's no commissions. And so that's a huge edge. A lot of people underestimate how powerful that is to use. Again, I can trade micro contracts. If I trade a regular NASDAQ contract, it can turn against me so fast. So fast. You're shorting this, yikes. Well, yeah, I mean, it kind of goes to show that sometimes contrarians can be right. You know. Love to see it that we made money on that one. The report's definitely good, right? The report's definitely good. There's not a code. You just got to click my link, Craig, and at checkout, you'll get it. Yeah, so we got out of there. We're breaking highs again. We could short like one contract of this again, but I'll wait. Yeah, we'll see. Okay, this is I would argue it's good data, but who knows, man? It could be anything, you know. Time will tell, you know. Market's strong. We'll see if it keeps pushing. We caught a little bit more of that move. Actually made a little bit more money. So, doing pretty good. Why short? It's good news for the markets. Because that's not always... Like, I'm looking at extension, right? I'm day trading this. So, I'm looking at extension specifically. And so, what I see here is that we had this big move, right? We have this big move. But that's a lot of extension up there as well. And so I don't mind taking small positions up here at the top and then coming back down. Like usually what traders get wrong a lot of the time. And it's not always, because sometimes these strategies work. But traders buy high of the day breakouts, they short low of the day shorts. But that's the top of the range, right? So if you look at the top of the range here, this is a big move, right? And payroll numbers were high. So it was very good data. Economics-wise, very good data economics-wise, but we're not going to go straight up. And so eventually what I like to do is I like to short when we get extension. And even if we continue up, so say we pull back some, I can profit on that downward move and make money. And even if we continue to go up here, I can still profit and get out enough to where if I manage the trade right, I can still have green trades there like I did in this situation. But if we continue going down and I still have a piece of it, then it'll look something like this. And we can ride the whole move down, right? So we're just trying to capitalize on extension. I think when a lot of traders start buying up stuff, it's the time they should be selling, and vice versa. I think a lot of the traders, like high of the day breakouts, don't work for most people. And the reason they don't work is because we're at the very top of the range. Experienced traders are taking profit, you know. Same thing with the bottom of the range. Low of the day shorts, while they have a little bit more momentum, I think sometimes, a lot of the time they don't work either because experienced traders are covering at the bottom of that range. They're not, you know, they're buying at the bottom of the range, I should say. So when I see big extension on the upside, I just try to capitalize on it, even if we have good data. You know, people act like the market moves perfectly sensical, and it's not always the case, right? We could have good data, the market can drop. We could have bad data, the market goes up. It's just not that easy to make money, earnings wise especially. Like, we can have great earnings, great revenue, great guidance, great EPS, and the stock can drop 5%. So it's just not that easy. It's not that predictable. I wish it was. But so with that, I try to profit off of extension. I try to look for a big extended move and play it that way. Need to get the herd thinking market is solid. Yeah. So again, and that's I'm using on a very similar thing. It's just everybody's different. My plan is to not hold it long enough to get stuck in it. And that's what we did. So again, you see what we did here. We just kind of made a quick little, like, these are all my trades over the last like 20. We've had 3 losses out of 20. So that's pretty good accuracy. My losses are relatively small. $1 here, 10.50, 10.50. So, but again, we'll have to wait for our next setup. Market looks like it's keep pushing up. It's not going to go up forever though, and that's the thing to understand. Like, that's my mentality here too, is that it's not going to go up forever. And again, this is the big edge of Top Step, which is that there's no PDT rule. I can day trade. There's 0 commissions. So in basic, if you're a new trader, whatever you decide to do, do the opposite. Kind of. Again, here's an example. Okay. New traders see a stock gapping up. Like, let's say this is pre-market, right? And let's say the stock entered pre-market and it went like this, right? It was here, and then it gaps up really big in pre-market, and then it opens up here, right? New traders are going to see this and be like, oh, look how strong it is. And they start buying here or buying up here, right? Experienced traders are going to say, hey, this is a 10% gap up. That's a big move up. What's the probabilities that it's going to go up even higher? Not super high, right? Experienced traders are going to say, hey, this is extended on the upside. We're at the very top of the range. It's extended on the upside. Let's ride it back down. Why? Because people start taking profit after they're up 10%. They start unloading. We're at the top of the range. They start taking profit. They have big resistance levels up there. And I think that's like the rookie mindset of like a gap up is strong. I'm not saying a gap up isn't strong. Obviously, a gapping up is strong in nature. But the price action that we get from a gap up, there's a very common thing which is called a gap fill, which means that if we, again, let's just say let's say here's the stock, a gap up happens to here, and it starts moving like this, right? What's very common is that it's going to come back down and fill some of this gap, right? It's going to fill some of this gap right here. Why? Because people take profit. They unload. They take profit. We have so much extension. Eventually, it wears out. It can't go up any higher, at least not short term. So I'm there to try to capitalize on that. And again, we're not right about everything. I'm certainly not claiming to even be a good day trader, right? Like, I don't claim anything. I'm not an investment professional. I'm not liable if you lose, right? But I think traders have the wrong mentality. And I think greed impacts that a lot, where you got like a 15, 20% gap up and they're trying to buy it up. And then when it turns around on them, they say, oh, manipulation, it's rigged. It should just go straight up on me, right? But the reality of it is, if you're buying up a stock that's up 20%, you're taking kind of a dumb trade, realistically. And with that said, look at it pump up even more, So again, maybe I'll short more. I'm just going to wait. Who? Somebody offend me? I don't think he said anything super offensive. I could say I've totally done this as a newbie. Right, a lot of people have. You see big gap ups, especially in penny stocks. It's like penny stocks are the most susceptible to it. But, and then you just get dumped on buying the high of the day or shorting the low of the day. And you say, hey, I don't understand what happens. And it's like, well, what happened is you were buying something that was up 20 freaking percent. And of course you didn't make money. We got this little bitty short up here. We entered one more short on Top Step X. Again, I can do this because there's no commission. But we're going to keep it small and keep it only one contract. This is taking too long. Yeah, I could kind of see it happen. I was like, yep, took too long. I could see it. And it might come right back down, but we're gonna wait. The only way I would trade this now is if I traded like a longer term trade, you know. So we've had 4 losses out of 20 here, so we're still doing good. That's exactly 80%, just to clarify accuracy. And my losses are pretty small too, relative to like my wins. They're pretty small. This is the NASDAQ 100 futures contract, basically the NDX. You know, here's gold. There's the NASDAQ. There's Nvidia. Are we thinking of buying gold? I don't know. Yeah, look at gold turn all the way back down. It's 2650s. So gold's coming all the way back down too. Why people buy more before election when uncertainty is there? I don't know, man. I think people, human nature in general, has FOMO a lot. They have fear of missing out. AMD's pushing up. We got a lot of green action right now too. But again, I'm going to wait. Like I do think we're up a lot short term, but I do think we're going to correct back down a little bit. I think we might see something like this. But I might be wrong. Do not copy me. I'm not an investment professional. I think we might see something like this. Down to like this level here, maybe this level. But I could certainly be wrong. You know. And again, I'm not confident enough in it to put money on it. Because this has been a very big squeeze. And understandably so, the payroll numbers were very good. Very good. Like we showed up. Percentage wise, we showed up at what, 253. So yeah, we showed up 80% higher than expected, roughly 80% higher than expected. It's a crazy number. 80% higher. It's a big number. SPY up 22% this year. Doesn't that seem way too extended? Well, sure. But again, you also got to understand this is like, okay, let's look at the last 5 years. So the real question is, how much are we up in the last 5 years for the SPY? Right? So the SPY, we're up about 100% in 5 years. So the SPY over the past 5 years is averaging about 20% a year. Right? In 2020, or that's in 4 years. So we're up about 25%. Let me see. So I'm trying to see. It depends on where we look at it. You know, like I think an easier way to look at it would be to look at it in 2022, 2023, and 2024. And so if we were at 16.5K in 2021. And so you can do like 20.2 thousand. And this is the NASDAQ, which is more tech heavy for sure. Minus 16,600, which has given us a 3,623 amount gain in the NASDAQ over the past 3 years. So percentage increase here if we're doing the math. In the past 3 years, like in the past 3 years, this is the better way to put it. In the past 3 years on the NASDAQ, we are up about 22% in 3 years, right? So if you do the math, that means that in the last 3 years, we're averaging about 7.3% a year. You know, if we use this top to calculate it, right? So the start of 2022 to today, we are averaging about 7.33%. So it's all relative to where, like, what time frame you look at. It really is, right? It really just depends. If we look at the SPY, it's going to be different because the NASDAQ is more tech-based. It's more tech-heavy. There's more tech stocks. We can do the same thing with the SPY from the same time frame here and see if it's different. So yeah, time frame on the SPY. So how much are we up since 2022? January 1st, 2022, we were at 480 on the SPY. 480 to 567 in 3 years. That's 18% in 3 years. Divided by 3 would give us an average gain of 6% in the SPY yearly of the past 3 years. And so I guess that's my point, and that's what people have to understand, is that you can isolate a time frame and make it sound ridiculous, or I can isolate a time frame and make it sound underperforming, right? Because average gains are 8 to 10%. But you have to understand, if we correct like this in 2022, so if we have this big correction in 2022, if we have a bunch of really big green years following that, does that mean like we're extended? No, it just means that we're bouncing back from this really weak year that we had in 2022. You know, the S&P average is about 10% a year, and that's an average, which includes crashes, big correction years like 2022. And so what that means is that on good years that aren't big red years, considering those have to be taken into the equation, on good years, we're going to do much more than 10%, right? And it's really easy to look at it and be like, oh, well, 10% is the average. We're up 20, 25% this year. It's like, sure, but in 2022, we dropped massively. You know, we had a really big red year. And so we're just rebounding from that is what we're doing now. And again, I could agree. I'm not really wanting to buy stuff up here either, you know, especially not with the election year ending in a couple months. But it's not as crazy as it seems, you know. And it's more crazy on the NASDAQ because of just the tech influence of it. You know, AI and tech have taken off a lot. The dollar index skyrocketing, isn't this a warning signal? Well, no, this is just correlating with payroll data, right? Like, okay, if we have more payrolls, what does that mean? It means more money circulation. And so what spikes? Anytime you get higher than expected payroll numbers, the dollar index is going to spike. That's not a shock. And especially if it's super high outside of what was expected, like 253 versus 140. 140, 150 expected, the dollar index is gonna go up. It's gonna spike crazy amounts. Why? Because payroll data was so much stronger than expected. It also does it during periods of high inflation. Like if inflation data comes in much higher than expected, the Dixie's gonna spike as well, because more inflation is better for the dollar, right? Strong means a stronger dollar, you know, if that makes sense. And then payroll numbers are the same correlation here, where higher payroll numbers means more people getting paid, which means the Dixie goes up, you know. Now, you got to understand, like, you got to look at the whole picture. A couple months ago, people said the Dixie was crashing, right? So, like, you got to look at it in that lens, too, where when you look at the Dixie over the past 3 years, it's actually pretty flat, you know. And again, you want to be really careful from, like, trading analysts and influencers and people, because when the Dixie goes like this, I talk about this a lot, but in 2020, let's just look at the last 5 years. In 2020, what happened? Let me make sure this is about right. So that's 2021. Let me go back a little bit more. Yeah, 2020 starts here. So following 2020, everybody said, "Oh no, the Dixie was crashing," right? And then with the stimulus checks, quantitative easing, money printing, rate cuts, the Dixie spiked, because that's a low interest rate environment, a dovish Fed, you know, and so the Dixie spiked. And then when the Dixie spiked, everybody said, oh no, the Dixie's spiking, it's the end of the world, right? And then when the Fed pivoted to a more restrictive stance where they're raising interest rates, they're pausing interest rates at high levels, they're doing quantitative tightening, so they're unloading their balance sheet, trying to push down the economy to combat inflation, then the Dixie starts to fall. And then what do they say? They say, oh no, the Dixie's crashing. Right? The Dixie goes up. Oh no, the Dixie's spiking. Dixie goes down. Oh no, the Dixie's crashing. And so no matter what, people are going to sensationalize the dollar index. If it's going up, they're going to say, oh no, inflation is the end of the world. If it's going down, they're going to say, oh no, it's crashing, it's the end of the world. No matter what, they're trying to make you think it's the end of the world. It's an election year, right? So no matter what, they're looking at it from that lens. They're trying to get people fearful, I guess, is the point. But really, if you look at the actual movement of the dollar index over the past 3 years, it's mostly choppy. It's kind of flat. Like I could draw a rectangle around it over the past 3 years, so it's not in any super dangerous place for sure. And again, with payroll numbers coming out today, it's pretty normal that it's going to spike one super high payroll count, Nah, man, we're up 30%. Yeah, we're up 30% from a bear low. Sure, bear market low. Yeah, we're just waiting to see if the SPY starts to turn. The SPY on a 5-minute candle, guys. Look at this 5-minute candle nuance of it. Like, look. So a SPY on a 5-minute candle has had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 green 5-minute candles in a row. Eventually, this has got to stop, though, right? Again, I'm not confident enough to short it, but... All right, guys. Yeah, I mean, I don't know if any of the news that we get in the U.S. is necessarily balanced. And so I just, it's just kind of like, it's kind of like YouTube, right? YouTube's great. I love YouTube as a platform, but some YouTubers, like in the finance space, they just try to sensationalize everything. They try to make you think it's the end of the world all the time because they try to tell you the stock market's going to crash every other week. And they've been saying that for freaking 5 years. Every other video they put out, a crash is coming, ... Face like this. You know what I mean? And like, I can't judge the faces. I use faces like this sometimes too because that's what gets clicks. But, again, some of them have been saying a crash is going to happen every week for years. And again, this whole time, the market's just kind of going up, like pushing up. And so they'll create another video where the market will go up 20% and then drop 3%. And then they'll isolate that 3% drop and see, we did crash. Why? Because drama gets views, More people are likely to tune in on a fire if something's burning down. And that's the nature of everything, Yeah, it is what it is. But again, and that's fine. Like, do whatever you want to do. But the real problem is that it makes people who, if you put too much trust, you're going to think the market's always about to crash, right? Same thing during election years, right? During election years, it's the end of the world. Every election year, apparently, it's just the end of the world, right? Even though, like, you look at the actual numbers, GDP's at 3%, payroll numbers are strong, unemployment's under 4.5%, right? Like, all the conventional metrics are pretty decent, right? It's not, things aren't good. I'm not saying things are good. The real issue is inflation has gone up so much in 5 years, which is the opposite of a recession, right? But that's the real problem that's impacting everyday people is prices. Prices have gone up to unsustainable levels, and I hate this because regardless of how much money you make, inflation destroys your income, right? Especially for me as like a business owner, and it destroys income, right? It's good in some ways, but like I can ask more for rent and rental properties and stuff like that, but like it's bad for everything else. And so again, I say this all the time, but 100,000 used to be something, right? Making 100K a year used to mean something. Now it's not that impressive, right? And I know we might have some people here that make 100K working a corporate job, and that might hurt to hear a little bit. But it's true. 100K doesn't mean that much anymore. It really doesn't. A lot of people make 100K depending on what state they live in. They're living paycheck to paycheck. And so the real issue is inflation. Prices have gone up so much. If you ask me, like, I was okay with not cutting rates personally. I would rather us go into a mini recession than have prices surge again, because they don't go back down. Once they go up, we're stuck with them. And so they don't go back down. And so we're SOL at that point in time. And all we can really do is hope to slow it down again. And that should be everybody's mindset. But lenders have talked people into, we need some low interest rate environment, and that's just not true. We don't need that. Like, real estate prices are up 70% in 5 years. 70%. It's okay if they correct. It's okay if car prices correct. Car prices have been obscenely high too. And so those things are due for corrections, in my opinion. And like, maintaining the worry, and again, to be fair, like, this is actually kind of preaching against something that's going to benefit me. I just bought a rental property, like literally just closed last week on a rental property. I paid for it. I got it under list price, which is good. But, if we have a low interest rate environment moving into next summer, it's going to benefit that rental property. Like, if we get a super good seller's market next spring, next summer, for the next real estate market in 2025, that's going to benefit me. We'll make money. But even if it benefits me, I would still rather prices get under control first, because again, like, 100,000 used to mean something and it doesn't anymore. And so that's a problem, and that should affect everybody, not just me. That should affect anybody and everybody at home, so. And again, just to put it into perspective, the reason I bought this property is because I understand prices might correct short term. I really do, right? Like, I probably understand more than most people prices could correct short term. But if we have a low interest rate environment in the next summer, they might not. The other thing is, I got it for a discount. I got it for 20% less than list, so I got it for 20% under, like, good price anyway. And so even if we do correct, I'm still probably going to be fine. And if prices do go up, we're going to be able to ask more for rent. We're going to obviously have appreciation. We're going to owe more property taxes, of course. But, long term, it should be fine. Because again, short term, there's risks in anything, in any type of investment. But long term heals a lot of wounds, And so over time, it's going to make money, And just in terms of cash flow, again, let's call it 300K. Let's say you make $2,500 a month. So let's say we make $2,500 a month. It's going to earn about $30,000 a year gross. Let's take about 40% of that off to taxes, expenses, HOA dues. And so we'll be left with about $18,000 cash flow a year. And this doesn't even include compounding. So over a 10-year period, like, we're going to make a good chunk of a percentage off of that property, right? And that's as long as everything goes to plan, right? So, again, just to put it into perspective, that is a 60% gain in 10 years from this property, right? Now, that's with the understanding that it doesn't appreciate at all, which is almost certain to do, right? So let's say we got 300K, and let's say it appreciates, the average real estate appreciation is 3 to 5% a year. So let's call it 4%. In 10 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That property in theory should be worth 450, right around 450. The other aspect of it is that as it appreciates, we're also going to be able to ask more for rent, right? So instead of getting $2,500 or whatever the rental price is going to be a month, we're going to instead be able to ask like $3,500, $3,500 to $4,000 a month in rent. And so that's going to increase over time as well. So the argument for rental properties is there, regardless of short-term swings in house prices. I'm trying to see what the Case-Shiller house price index showed last time anyway. Let me see the Case-Shiller. Yeah, and the good thing is that in a lot of places, real estate prices are never going to go down. So like in theory, where I bought it was a very good place. I used logic on where I bought it, so that's good. But yeah. Oh, for sure. A lot of people just live above their means, unfortunately, right? Like, you got to live within your means. And that's the big mistake a lot of people make. Again, don't try to look rich, be rich. You know, a lot of people think you need all these super luxurious things, like super fancy cars and super fancy, like, stuff. You know, riches yell, wealth whispers, they say. You know, so I think you got to look at it from that mindset and understand smart people, wealthy people do so because they're smart about expenses. They're smart about buying things. They're smart about what they spend money on. You know, again, if you got $1 million, you don't want to spend 20 or 30% of that on a depreciating asset like a car, right? Especially a new car. Like buying a new car, unless you have so much money it doesn't matter. You should never buy a new car, right? Especially not finance a new car, right? You should never finance a new car, especially at these current interest rates. You can get a really nice used car 40-50% less. So buying a brand new car makes absolutely no sense. Again, unless you have FU money like that, which is not most people. I mean, Palantir broke highs again. Palantir got up to almost 40. Tapped 39.91 for Palantir. Depends on your definition of reasonable. 100K is surviving. 300K is reasonably comfortable. Yeah, I mean, that's true. Living paycheck to paycheck means you're spending too much money. If you own your own home and you don't live in Cali, you can live off of $1,200 to $1,800 a month. Sure, but I mean, what's the percentage of people that actually own their own home without a mortgage? Right? Like, I think that percentage is very low in terms of people. It's certainly not the majority of people. You know, a different thing is New York, Cali. It's a different thing. You know, but there's also like people like to hate on New York and Cali, but working a corporate job in Cali, you're going to get paid so much more than you're going to get paid working a corporate job in Texas, right? So the income there is higher. And so that's generally what correlates with the house prices, right? And that's what happened to house prices in general, is that Silicon Valley had so many really wealthy people there that prices went up over time, you know. What do you do if you have FU money, but you don't have the desire to spend it? Well, put it in bonds. Put it in whatever you want to put it in. If you have FU money, you should have a lot of options in terms of investing. You know, you could buy bonds. You could do whatever you want. Like, there's a lot of ways. All right, guys. Whew. All right. All right, so we're still pumping up here. We didn't get that little pullback. I don't know if it was large enough, though, for me to... I'm glad I didn't jump in anything yet. Now we're just kind of choppy. I'm waiting for the opening bell. I don't know how the market's going to behave at the open. Yeah, I mean, I live in Texas, right? So for $1 million, I can get like a little mini mansion here. In Cali, I'm going to get like a little bitty home. You know, so it depends. But again, in Cali, you get paid way more too, you know. Like in California, almost everybody makes 100K or more. So it's different. Yeah, if you have FU money, right? Like, again, let's say you got 20 million, which I would consider that. You could spend half of that in guaranteed yield returns. Let's call it 4%. You know, so you can make 4% a year in guaranteed yield returns with 20 million, right? For 10-year treasury bonds is what I'm using. So you could buy literal guaranteed returns by the U.S. government. You're guaranteed if you take that 20 million and put it in treasury bonds, you're gonna get $800,000 a year in interest payments. Who can't live off of $800K a year, right? And it's guaranteed returns. And then at the end of that 10-year period, you're gonna get your 20K back, or you're gonna get your 20 million back. And so who can't live off of those returns? You can put half of that and make $400K a year, right? So over a 10-year period in treasury bonds, you're going to make 25% returns over 10 years in treasury bonds. And so, you can buy bonds, guaranteed returns. But again, I think that's dumb to a certain extent. Not dumb. I think it's dumb putting everything in treasury bonds. I think if you have time on your hands and if you have time, right, you should be investing in the S&P, the NASDAQ, the Dow, gold, whatever other conventional investment asset you want, right? And again, I'm not telling you you're going to make money. There's always risks. There's always variance. But long term, the S&P, the NASDAQ, the Dow are very, very, very consistent. So like if you're able to hold for 20 years, you're going to make money almost certainly, right? It's never a certainty, but you're very, very probable to make money over a 10 or 20 year period if you invest in the S&P or the NASDAQ. Short term is where the risks are there. And so if you're imminently going to retire, obviously it might not be good to invest in the S&P, the NASDAQ, blue chip stocks, whatever it is, because you got to retire. You need that money, right? Buy like a year, 2-year bond, depending on when you're going to retire, and make something, keep up with inflation, but don't risk it in the S&P or the NASDAQ short term. If you're 30 years old and you're retiring in 30 years, that's when you should be sticking money in the S&P, the NASDAQ, dollar cost averaging over time and letting it work for you over time. Because that's when you have the really big exponential gains that you get from long-term value investing, or from investing, I should say. Value investing is a specific strategy. But you can't do it with penny stocks. You're not going to do it with mid-cap stocks. Everybody ends up wasting money by putting all their money in really speculative new companies that are only really a few years old. Right, so they find these companies that are really hyped up, really hot. They think they're blue chip stocks, even though they're pretty new. They're not legacy companies. And they end up putting everything they have in them. But mid caps drop 30, 40, 50% a year sometimes. They correct massively. And so then they end up losing money and thinking the stock market's rigged, when really, and part of the problem is that when they say they want to invest in Apple or Amazon or Walmart, people discourage them from doing it because, people are weird. And so you should never be shorting those big blue chip stocks. You should only be really accumulating shares over time, in my opinion, holding long term. In theory, I said this many times, but in theory, you should be holding those forever, because over time, that's the way to build generational wealth. Eventually, you can hand them off to your kids or whatever you want to do with them, get leverage from them. Right, exactly. Can you borrow against the 20-year T-bill? I'm not sure. I've never tried. No, it's 800K, I'm pretty sure, right? Let me see. I'm talking about $20 million, right? I'm talking about 4% of $20 million. Yeah, it's 800,000. It's 4%. The way you can tell is you can do 800. Oh yeah, I have to figure out the math. But yeah, that's right. I'm pretty sure. Let me look it up. What is 4% of 20 million? Yeah, 800K. That's right. How is it possible that the Dixie and stocks are going up at the same time? Because payroll numbers showed up way, way higher than expected. There's somewhat of a correlation in which the Dixie and the market moves opposite, but it's not always, for sure. And again, if payroll numbers are something that the market, it depends on what the market wants, right? If the market's fearing inflation and inflation's at 10% and everybody's scared of inflation, the market is actually going to want lower than expected payroll numbers, not higher. They're going to want weaker payroll numbers. They're going to want higher unemployment. They're going to want anything that signals less people working and spending, right? Because inflation is out of control, and what combats inflation? Less spending. And so if that's the nuance of the market at any given time, then the market's going to want less economic reports, right? And so if payroll numbers shows up really high, number one, the market's probably going to go down in fear. And number two, the dollar index is going to spike up, thus having a inverse correlation there, right? If the market is the opposite, like it is now, where it wants economic strength, it fears recessions versus inflation, and it wants economic strength. Again, in that situation like today, if we have higher than expected payroll numbers, the market's going to go up from it because it wants wants a stronger economy. It doesn't fear inflation as much because inflation has gotten better. And so in that situation, again, the Dixie's going to go up because it's higher payroll numbers, right? That's going to make the Dixie immediately go up. But the market's also going to move up in sympathy, or move up with it in a parallel way, just because the market wants a stronger economy versus a weaker economy. So it depends on what the market fears at any given time, and that's going to influence how the market reacts to it. Recently, over the past at least 3 or 4 months, we've pivoted to a good is good and bad is bad scenario. And what I mean by that is when inflation was out of control, good was bad and bad was good, right? What I mean by that is economic strength was bad because it makes inflation worse, right? More spending, more payroll numbers, more jobs means inflation goes up more. And so that's bad, and higher payroll numbers, stuff like that would make the market go down, not up. And that was like that for a year. We've had a really restrictive Fed for the last year. We've since, again, pivoted back to a good is good scenario, meaning economic growth is good, right? Higher payroll numbers is good. That's why the market pumped up so much on higher payroll numbers. But that's not adjusted for inflation. Of course it's not adjusted for inflation. That's a silly metric, right? Why is it a silly metric? Is because investing in real estate, investing in bonds, the whole point of that is to keep up with inflation, So it doesn't make sense to adjust it for inflation because, again, the point is not to necessarily make money. It's to stop yourself from losing money over time, because, again, I do this formula a lot here. If you've got 100K, and inflation is at 2.5%, right? In 20, 30 years, that 100K over time, and that's assuming it stays at an average of 2.5%, which is a really optimistic look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. Okay, 30 years, you're going to lose over 50% of that 100K from inflation. Probably more, realistically. It's honestly probably much more than this. But just in the most optimistic outlook, you're going to lose 50% over 30 years of your money. And so if you don't stick that money somewhere, if you don't buy bonds, if you don't buy real estate, if you don't buy stocks, if you don't buy gold, if you don't buy silver, if you don't buy something, you're going to lose money. And you can even combat it through mortgages if mortgage rates are reasonable, at least, which is not really right now. But even if you get a mortgage on a property, right? Let's say your mortgage is $2,000 a month. Over time, we can do the same formula to that. Over time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 30 years, that $2,000 mortgage is going to feel like it's about $935 today, right? So it's going to be less significant over your overall, life, because inflation is going to render it less relevant to your finances, right? And that's assuming you get paid more in that scale over time as well from inflation. So I guess you could hedge against inflation in a lot of different ways. But yeah. All right, guys, we got 5 minutes. Bitcoin, I like Bitcoin for sure. But Bitcoin's still pretty new. And I'm a big believer in Bitcoin. I love Bitcoin, but it's still pretty new. It's one of the single best performing assets of all time ever. So, I mean, I'm not underestimating Bitcoin. If it was me, I would put at least some in Bitcoin for sure. But that's just me. I'm not telling anybody what to do. I don't know what you should do. I don't know what it's going to do long term. Can you say your opinion on the VIX price right now? What's the VIX at? I mean, volatility is still relatively low relative to the last year. I mean, it's up a little bit, but we're also going to have more volatility into the fall months usually, right? Yeah, usually volatility spikes, but I don't know. It depends. If you look at a long-term VIX chart, VIX is the volatility ETF. It goes up when volatility is high. It goes down when volatility is low. If you look at a VIX chart over, we're pretty much, like, we're at the top of the range outside of, like, crazy crashes in 2020 and 2008. And I'm surprised the VIX didn't move more in 2000, but, yeah, 1987. So we're watching the VIX, but, Sorry, I missed everything. Payroll numbers came in way higher than expected. Way, way higher than expected. Again, if you haven't already, check out Top Step funded account program in futures. That's what we're trading today. We did get that pullback that we thought we might. I don't know if it pulled back enough as much as I said it would, but eventually we did get that slowdown. We're going to trade into the opening bell today, live, like we always do. The market open is in about 3.5 minutes, 3 minutes. And so we're going to day trade live. And again, in the futures market, you can day trade short, buy market, sell market, very similar to day trading stocks. You can day trade the S&P, the NASDAQ, gold, currencies in some places. And again, a great way to learn how to day trade is Top Step's funded account program. There's no commissions. You can literally day trade short, buy market, sell market, very similar to day trading stocks. There's no PDT rule. And on Top Step X, there's no commissions. And so I can trade micro contracts, 74 cents in fees per trade, net $6.50, $1, $23. I could actually net profit in these small trades and scale out more safely than using like regular E-mini contracts, which I can lose thousands so fast. And again, what Top Step does is they give you a demo, test your skill. If you pass the test, they fund you. If you fail the test, you only lose the monthly subscription. They've paid out over $40 million to their traders. They fund thousands of traders. It's a great way to learn how to day trade. And most day traders lose money, right? Doesn't matter where they go, most day traders lose. It's a lot cheaper to lose on Top Step, to be honest, in my opinion. But again, they're a sponsor of mine. They pay me money. I'm biased, of course. But if you want to check them out, here's the link. Great way to help support our free content. Everything we do here is free. We don't charge for content. We don't sell courses. We don't even claim to be good traders. What we try to do is give people free economics lessons, let people understand economics, trading in general, without even claiming to be good. I do trade off stream. You're not going to see all my trades. But we get a lot of people here for these big reports because we cover them quickly. We cover them faster than everybody else usually, as well as we break everything down in a simple, understandable way. So if you haven't already, subscribe, hit the notification bell. We're trying to hit 150,000 in subscribers, chat. We're getting close. We're getting close. Almost at 158K or 150K. So we're getting very close. What is a payroll number? 254,000 is a payroll number. Payrolls are measuring jobs for those that don't understand. So this is 254,000 jobs is what it is. And higher payroll number signals more jobs. It means stronger economy. The more businesses hire other people, the more they expand, the more the economy grows, right? Like that's what payroll numbers are. And that excludes farm data. So it's non-farm payrolls. I'm just here for the top 3 worst traders. I'm definitely one of the top 3-ish worst ever in the world right now. Definitely top 3-ish. Tesla up to 247s. Tesla just broke highs again. Gold is almost green on the day. It's flat. Went down a lot after payrolls, kind of rebound a lot, sitting right at the 200 EMA. Unemployment again showing up at 4.2%. Or 4.1%, I mean, I'm sorry. Supermicro is up. Supermicro, the problem is it's got 60 million in the float. That's a tiny float for a company like this. Volatility is there. It's susceptible to being manipulated as well. Like there's a lot of stuff that makes it kind of sketchy, in my opinion. I don't buy it. I've never really been a big investor, and it's too risky, you know. All right, guys, there's the opening bell. We're green on the day so far. I'm gonna let the opening bell play out. Let 5 minutes pass before we take any big risks. Yeah, so market so far has been pretty flat after pumping up a lot from payroll data. Pretty flat. Could be worse, but could be better as well. Look at the Fed Watch Tool percentages. Wow, so yeah, so look at this, guys. So the Fed Watch Tool percentages have just changed drastically. Prior to the payroll report, these numbers were at about 65, 35, right? So prior to the payroll report, these numbers were much closer, right? Since the payroll report and showing such a strong payroll report, such strong job numbers, this has changed all the way down to 90+% chance of a 25 basis point cut. Basically, we need rate cuts are less necessary if the economy is strong. You cut rates if things are weak. With payroll numbers being so strong, there's less of a need to cut rates aggressively. So right now, big chance of a 25 basis point cut, only a 9% chance of a 50. So that's the stat changes here for that. It was the change from payroll numbers for sure. If you're talking about this big move here, this is definitely payroll related, 100%. Also, the dock strike got settled. It's suspended, so that's good. But this is definitely from payrolls. It happened exactly at 8:30. Here's 8:30, you know. All right, so there's that big correction we talked about. You know, we did kind of talk about this a lot. Remember, we said this was very probable that we would go up. And then I think I don't remember what line I drew it at, but I said we would go up and then we would come back down, you know. And that's exactly what we got. Not too difficult to predict that though, to be honest. The probability about the Fed, yeah, this is definitely from payrolls. The swing in probabilities for rate cuts is certainly from payrolls. You know, the stuff going on overseas, I'm not going to say it's irrelevant, but today the payroll announcement was the priority. You think gold will correct as well? Gold's moving a little differently. The gold payrolls shot up the S&P, the NASDAQ, the Dow. But as payrolls dropped, gold actually dumped a little bit. Since then, though, it's basically rebounded all the way. So gold's actually essentially pretty much flat on the day, as well as flat relative to when the report came out. It went down a lot, and then it bounced back a lot. It's still a little red from the report, but not a lot anymore. So we are dipping a little bit. SPY's right at the VWAP though. Again, I'm going to let the first 5 minutes play out. We do have a cushion on the day so far. We've made a little bit of money so far. We're going to see if we can keep that up. Hey, y'all hit that subscribe button, guys. We're really getting pretty close to 148K. So y'all subscribe. Everything we do here is free. We don't charge for anything. I don't even claim to be a good trader, but we report economic data quickly and reliably. If you want a one-stop shop where we cover economic reports like CPI, PPI, PCE data, jobless claims reports, weekly unemployment, payrolls, Jerome Powell, FOMC meetings, speeches, earnings, we cover it all. So, and again, if you want to know if something's going on in markets, subscribe, hit the notification bell. Everything we do here is free. Yeah, we went down a little bit at the open, but we're since rebounding back up, which is why I'm trying to let the opening bell play a little bit first. AMD just broke highs too, up to over 168. So AMD's running. Tesla back up to almost 250s. Is at 248s, right around 248s. No, I mean, I understood what you mean, that it's kind of like a break even. Shah. It's kind of like a break even when you consider inflation in the mix regarding 20 million, the 800K in interest payments for bonds and treasury bonds over that period of time. Like, I understand what you mean. What I'm saying is like that's the point. Because if you didn't invest in it, instead of being break even, you'd be down a bunch, right? And so, and again, if you want to really outperform the market relative to inflation, that's why I said buying the S&P and the Nasdaq or the Dow over a long-term period of time is the move. Because like bonds will pay you right now. What are they paying at? 10-year bonds currently paying 4%, right? 3.95% for 10-year bonds. And so you're going to make about 4% treasury bonds right now. The S&P, the Nasdaq, the Dow, they average 8 to 10% a year, right? Well, last few years they've been doing 20+%. And so that's how you really outperform inflation, is by investing. Now, it's not guaranteed. There's more risks. Like bonds paying 4% are guaranteed. You're going to make money, right? If you buy them. I mean, with the exception of like, unless something crazy happens. But if that happened, again, you're going to have a lot bigger problems than your bond payments not paying out. But if you're holding something long-term, 10, 20 years, the S&P, Nasdaq, Dow, in my opinion, is the way to go. But I'm not an investment professional. I'm not telling you what to do. I might be wildly wrong about anything and everything I say. Definitely top 3 worst trader ever right now. So don't copy me. I have no idea what I'm talking about. Tesla, move it up. It's at 248 plus now. All right, so we got a big turnaround. Everything's looking kind of weak. We made this big move up. I'm going to buy this dip. First trade since the opening bell. There we go. All right, so we just made about $30 really, really quickly on that big retracement. Beautiful time for me to buy. We caught that thing perfectly. Just made about 30 bucks. John is issuing definitely top 3 disclaimers ever, Max, for sure. Top 3-ish. I would say maybe top 2 disclaimers ever. I just try to tell people, like, look, I don't want people to copy me. You know, being honest with people. I think there's enough people trying to act like freaking expert gurus. I'd rather just tell people I don't know. You know. John provided a disclaimer. I only eat organic Fruity Pebbles. I didn't always eat organic Fruity Pebbles, you know. Once I've evolved in life, you know, I went from eating regular Fruity Pebbles to organic Fruity Pebbles, you know. I've kind of just evolved. That's like the biggest flex I could ever make, you know. All right, AMD still testing highs. Tesla breaking highs. A lot of stuff's turned the last like 20 minutes, 15 minutes. Yeah, if you're just out tuning in, they heard a phone call I had with my wife. My wife was at the store. She said, "Hey, baby, what do you want to eat?" And I said, "Organic Fruity Pebbles." And now the stream has messed with me ever since. I try to be organic. Listen, I'm a cereal eater. I really am. You know, I eat a lot of cereal. I don't know. The last few years, I've kind of pivoted to eating. Like, I'll eat like a vanilla almond cereal. And so I've kind of gotten healthier with my cereals, you know. I used to eat like freaking Captain Crunch and all that stuff. Terrible for you. But I've gotten better. Yeah, we've tried these. We actually have some of these. $10 a pack, though. That's kind of, yeah. Yeah, It's that inflation, guys. That inflation. Oh, dude. Sometimes I'll eat half a box at a meal. Bro, these spammers, dude, these scammers are freaking everywhere, dude. They're horrible, bro. Like, who came up with this line? Like, these scammers are so ridiculous, dude. They're like, hey, we got a sponsorship opportunity. We're Aquafina. And it's like, get out of my inbox, scammers. You know? It's like, who's gonna believe that? Like, genuinely, who's gonna believe that? You know? Like, there's some good, like, people that reach out for sponsors, but some of them are just totally, like, absolutely crazy. You know, we had San Pellegrino. Like, dude, like, y'all know you're not San Pellegrino. Like, get out of here. Get out of my inbox. Like, make it believable at least. Like, act like you're something believable. Like, you know the likelihood that the real San Pellegrino would be reaching out to me trying to freaking sponsor me? Like, of course they're not. Oh, John from Beginner Trading? Like... I could try to sell you guys water 1,000 times. Nobody here would buy it, right? It wouldn't matter. You know why? Because it's not relevant to my brand at all. Just dumb, man. What they do is they get people that are so desperate to have sponsors that they ignore all the red flags. You actually see that a lot. Sorry if I yelled into the mic. You see it a lot. I see it a lot on Facebook. Here's one that I haven't talked about before. If you go to a Facebook page, they'll have these different groups that, you know, maybe like I have some like watch groups or like whatever the interest is. And the market's completely flat, so I'm not really buying up anything right now because it's too choppy. So I'm waiting. But you'll have some of these groups, right? And the scammers, what they'll do is they'll advertise a quote unquote job position, right? But it's too good to be true. They'll be like, oh, the hours are from 9 to 3. You'll make $7,000 a month acting as a customer service representative. And they'll use a big brand. They'll be like, yeah, it's for AT&T, you know? And so the people are so excited. They think that they're getting a job. And they'll be like, if you want this job, leave a comment here and you'll see it. They'll be like, me, I want the job. I want the job. So people are just getting got with this all the time. And like, they'll make it too good to be true. So they'll be like, oh, you're going to make $7,000 a month working from 9 a.m. to 2 p.m. No weekends, you know, for AT&T. And it's just total nonsense. And what they do is they get people to, I don't know. I've never gotten far enough in them to know what their end goal is. I know it's either phishing for data, like they're going to try to get you to click on a sketchy link and then steal your passwords and then hack you and steal from you is what they're probably going to do. So I know some of the other ones will string people along to think that they got a job, but then they'll start asking them for like a sign-up fee or like paying hundreds of dollars for a background check or a credit check or whatever it is, and that's their end goal, is to get paid. To have the people who are so desperate enough for the job to send them a couple $100s, right? Because again, if you want to believe you're getting hired for this, you'll ignore a lot of those red flags. I see those a lot, right? People get gotten from those a lot, unfortunately. And just understand, right? Like, no job is going to pay you to work from 9 to 2, pay you $7,000 a month for virtually nothing. Like, they can outsource that stuff for so cheap. Like, it's always too good to be true. And it's always like a weird link that they have you send. It's like an Amazon link sometimes. I've had to save a couple people that were getting caught in that, you know. Like, anytime I see one, I just say scam under it. I say scam. But people get gotten with it, man. All right, so yeah, market's flat, guys. It's not really doing anything. SPY's choppy, Nasdaq's choppy. We had this big move up, and now we're not really going down too much, but we're mostly just flat. AMD just broke highs again. Tesla just broke highs. Tesla's right at 250s. So right at 250, Tesla's up there. It's trying. Yeah, I can see how that would be one pawn. Again, man, people get so excited for stuff like that they ignore all the red flags, and I get it. Like it's if you're struggling to find work and you see somebody offering you some like life-changing amount of money in salary, even if there's red flags, a lot of people are going to ignore it, you know. AMD up to 169s. He's planning on short selling this. Honestly, the range, I usually like to trade chop, you know, and I've made a little bit today, but I usually like to trade chop, but this is almost too compact, right? It's way too, like, this range is tiny, you know. So what I'll probably do is wait for us to break out of this range. There's just not enough of a range to profit from, I would say, you know. The elderly are having a tough time distinguishing from AI. Yeah. The data was crazy, Nas. It came in way, way better than expected. Way, way better. Yeah, in the end, like, I don't click on anything. I don't even click on emails that people send me. You know, I just avoid all of it. I try not to get stuck in it. It's too risky. You know, the phishing emails also get really good, where they will claim to be like PayPal or something, and the only way you can really check, you got to check the actual URL. So they'll have PayPal up there, and they'll say, "Oh, a charge is going through on your account. Click here." But if you check the email, it'll be like some random name, like Billy. You know, like, "Oh, Billy." You know, I'm sure PayPal's real URL is just Billy. Billy at Hotmail. But yeah, you see that one a lot too. Palantir again down a little bit. AMD pulling back. Tesla almost at 250s, but it's now pulling back some now. Such a tight range here, guys. Even gold, everything's kind of flat. Nvidia usually influences the market, but Nvidia hasn't really done too much since the open either. It's downtrending a little bit, though. It does look a little weak. So I'm going to short this right here. I'm going to short it again. 2 contracts. Yeah, the choppiness is almost too obvious. There we go. All right, just made another 15 bucks. I'm betting it on Nvidia. I think Nvidia might reject 200 and drag the NASDAQ down. I could certainly be wrong here, though. But I think Nvidia moves the market, and so we were correct there. Yeah, a lot of stuff's flat and boring. Amazon's up. Amazon's breaking highs as we speak. Yeah, again, I was thinking we might break down, but now we're actually moving up. We're just so choppy. Maybe the choppiness is predictable, but we've been choppy for a little bit too long. And there's a flush back down too. News wasn't that good. The news was great. Payroll numbers showed up 80% higher than expected. So, I mean, whether you think that's good or not depends, but it was much better than expected. If you did sell water, yeah, well, what those emails are about is they're just scammers, right? So they'll try to pretend to be like Aquafina or like some big brand, you know, And like usually they're hoping the person ignores the red flags. Let me see. Aquafina. I've got a couple Aquafina ones. Oh, where'd they go? Oh, I put them in this. Yeah, like listen to this. Listen to this email. I'm gonna read it to you. Dear YouTuber, my name is Jessica. And I'm contacting you from Aquafina, since we appreciate what you do on your YouTube channel. Like, oh, Aquafina's watching me, guys. All right, they're watching me. You're one of a kind content. Your one-of-a-kind content and the connection you have with your audience is truly impressive. We are keen on working together, so you can create a 30-second Aquafina commercial. Our mineral water is known for its purity and quality, and we think it would align nicely with your viewers. Jessica from Aquafina. Let me see what the email is. Yeah, they hid their email address. Like, just come on now. San Pellegrino was one too. Yeah, look, here's another one. We are pleased to introduce you to San Pellegrino and propose a remarkable advertising partnership. We cherish your talents and charisma. Man, apparently, guys, I'm hot in water right now. You know, like I'm hot in the water space. Like people who drink water, people who sell water, they're like John, beginner trading, man. He's the guy right now, I guess. You know, it's got to be freaking plausible for it to work. You know, like just dumb. Funny though. It's still funny nonetheless. I can use it for content. So listen, I can market it and use it for content. So that's good, I guess. Yeah, they hit me with Aquafina when that didn't work. They tried to, take a step up here and hit me with San Pellegrino. Hit the carbonated, sparkling mineral water, Yeah. All right, so we did get that breakdown. So I was right about that breakdown. We'll see if Nvidia breaks down under the 200 EMA. Palantir is still up there. We're still waiting. Here, hold on, guys. I gotta check something. Gold is strong too, yeah, for sure. John, top 3 most famous people in the world right now. Definitely top 3 least famous. Prime will reach out next week. Yeah, like we're just gonna see level up. We did get the breakdown. I was correct about the direction. So. James Rainey said, no matter how intelligent you are, you can be and will be fooled under certain conditions unless you learn what to watch out for. 100%. There's a lot of stuff. Like, again, the easiest way to put it is if it's too good to be true, it usually is. That's the easiest way I can spot it. If it's too good to be true. You also, just by watching things, you kind of learn what to look for and what not to look for. Or what to look for, like what are the real red flags. Anything promising to pay you like big amounts is usually kind of sketch. All right, guys. Amazon at 186.50s. All right, so I'm going to get out of here, guys. My wife's about to be home, and I got to see how the parent-teacher appointment went. So, hey, I love you all. Y'all have a great day. Again, if you want to check out Top Step, y'all have a great weekend. Have a great weekend. Check out Top Step. Again, the biggest edge in funding right now, in my opinion. I can take these small little trades, make money, and only have 74 cents in fees. Top Step gives you a demo, and they test your skill with the demo and futures first. If you pass the test with the demo, they fund you with 50K up to 150K with a 90% split. So 90% similar to funding your own account. The risk is much less. If you lose, the base one's only $49 a month. And so if you lose, you're only out $50 basically. It's not the end of the world. It's a great way to learn day trading, a great condition to learn day trading on because you're still risking something, just not the full extent like a live account would. And in the futures market, you can day trade the S&P, the NASDAQ, gold, some currencies, very similar to day trading stocks. The patterns are similar. And again, if you haven't checked them out, I'll put the link up. There's zero commissions, there's a tiny amount of fees, zero commissions on Top Step. Check it out. Here's the link. Great way to help support the channel. I love you guys. Y'all have a great day. Have a great weekend. Here's the link in chat. Understand they are a sponsor of mine. They pay me money. I'm biased, guys. But I'll see y'all later. Y'all have a great weekend.